In London with Francine Lacroix in Rome. Fran.
Yeah, I'm excited to be here. The view's amazing. I know you don't want me to tell you why I'm here, but just look at the view, Tom. But we're here because of the election. Of course, the focus is firmly on that Putin call with Italian chief executives that may go ahead or not.
What a beautiful shot. We should linger on that. But we're going to get to the headlines, Fran, and we'll be back to you shortly. The top stories today then. Fed Day, as you say, futures climb ahead of today's meeting. Jay Powell will almost certainly signal a March hike. The question, how big? Plus, raising the stakes. President Biden weighs personal sanctions against Vladimir Putin if Russia invades Ukraine. Germany seeks an exemption for energy. Plus, eyes on Italy. The second day of voting gives no winner in the presidential election. Prime Minister Mario Draghi remains the lead candidate. Of course, Fran is on the ground for us with all the details out of Italy. Let's check in then on the futures. You had some modest gains across the European equity space yesterday. Then, of course, you had the picture in the US. Again, another day of incredible volatility in the S&P 500 ending at its lowest point since October. The story around Microsoft and the way the markets reacted there, I thought was fascinating. Just how ready investors are to punish these big tech companies if they don't meet across the board. Of course, Microsoft then ended in terms of post-market trading higher on the back of some reassurance around its cloud business. Here's how the markets are opening then in the UK as we lead across to that Fed meeting and the decision. Will we get a dovish tone from Jay Powell, given the volatility that we've seen across these asset classes in the last few days? Does he reassure on the Fed put, or do we get a more hawkish Jay Powell in light of the 4-decade high inflation? The UK and the FTSE 100 gaining 0.9%. The CAC 40 is higher by 64 points, and the Spanish IBEX is gaining as well, 0.7%. There is a view among some strategists, of course, that if you want to find a safe haven, you can find that in European equities with that tilt towards value and cyclicals. Let's move it on and have a look at how things are playing out across asset then. We're keeping, of course, an eye on the Russian ruble, given that geopolitics remains front and center for us. That warning from Joe Biden that Putin himself could be, for the first time, targeted with sanctions. Currently, the ruble, we're not showing it now, but we'll get that shortly. The futures stateside pointing to gains of 0.3%, again, after the S&P 500 ended at its lowest point since October. The US 10-year is currently at 177. We're watching the short end of the curve as well to see the reaction function to that on the back of the Fed, of course. And Brent is currently at $88, gaining 0.3%, and the geopolitics plays into that question mark about energy supplies and demand. Bitcoin at 37,395, gaining at 2.2%. So some relief in the crypto space. Fran.
Yeah, Tom, I have to say this energy, question about how to deal with Ukraine and how to deal with Putin is really at the forefront here in Rome. So we had a discussion in November. There was this virtual conference call called by a lot of chief executives here in Italy with Vladimir Putin. Now, this just yesterday was meant to go ahead, but then today we had the Italian government saying, like, look, this is a private initiative. They actually urged companies, including the Generali chief executive, we understand, the Enel chief executives and others, maybe not to join that call. So it's a little bit of a hot potato here at the moment in Rome, just when we're also watching the presidential election, whether Mario Draghi becomes president or whether he stays prime minister, or whether he leaves altogether. It's a big question for the markets because of the relative stability we've enjoyed in Italian markets over the last 12 months.
Absolutely, such a stabilizing force, a well-known face, of course, for investors in Italy, but globally as well. We've seen Italian assets, the BTPs, of course, the equities as well, being relatively unconcerned so far. But you, of course, point to the importance of watching this, and that is why Fran is on the ground for us. Mario Draghi is still the front rider. We'll try, hopefully get some more clarity, Fran.
Yeah, and Tom, it really is all about the EU funds, right? If you put this in context, it's Mario Draghi that managed to persuade the EU also to get a big chunk of those. In part, they were also put in place to help countries like Italy. That is because of the amount of money that it receives, but also because of the austerity measures that they put in place. So if he leaves as prime minister, it's very difficult to fill those shoes to make sure that those grants and loans are still disbursed by the EU.
Yeah, the future of that reform agenda in Italy, of course, in question as we face these political changes. Okay, let's get the Bloomberg Business Flash then with Laura. Right, Laura.
Thanks, Tom. Microsoft shares recovered in late trade after the software giant reassured investors that its Azure cloud computing business still has the potential to drive growth. The company posted second quarter sales and profit gains, with revenue climbing 20% to $50.7 billion. Sources say Deutsche Bank is weighing a 15% increase to its bonus pool as it looks to compete for talent while keeping costs low. Still, there will be a divergence in pay across units, with raises for the investment bank and cuts for some of the back office staff. Investment banking generated almost double the profit of Deutsche's 3 other divisions combined last year. Bank of America is rewarding almost all of its employees with a pool of $1 billion in restricted stock, further boosting compensation as financial firms compete to attract and retain workers. The incentive will come on top of regular compensation and goes to staff who earn as much as $500,000 a year. That's according to a memo from the CEO, Brian Moynihan. And in a sign that live events are back, tech platform Fever has raised $227 million in a funding round led by Goldman Sachs Asset Management. The company that sells access to in-person attractions such as an immersive Van Gogh exhibition or a Bridgerton-themed ball is now valued at over $1 billion. The company's CEO tells Bloomberg that it now has a clear path toward an IPO. That's the Bloomberg Business Flash. Tom, I can really see you at a Bridgerton-themed ball. I know it was one of your favourite series on Netflix.
I'm glad you can see that, Laura, because I certainly can't. But my wife is a big fan. We had a big dispute over this. Yeah, not too into it. But you know, who knows? If you're going, if others are going, maybe there's an incentive there to a Bridgerton-themed ball. We'll have to improve the outfits, I think. Laura Wright, thank you very much indeed. Okay, let's get into the key market drivers with our markets editor, Christina Aquino, as well as Ralph Broiser, who is Global Head of Rates Research at Bank of America Global Research. Christine, let's start with you then. The market reaction stateside. We'll talk about the equities in Europe and the fact that they held on to some modest gains yesterday, but it was what happened, the volatility again resurfacing yesterday in the US, and I just thought the reaction to the Microsoft earnings was pretty fascinating as well. What was the takeaway from you from that the equities moves that we saw in the States?
Well, Tom, there's definitely a tussle here between the buy the dip strategy that really has been really popular over the last few years versus the fact that potentially this idea of the Fed put is fading, if not already did. And I think this is really what we're seeing, whether it's the Microsoft example as a microcosm of this or the broader equity moves. There really is this struggle between this idea of equities kind of recovering consistently from dips like this and the idea that, hey, you know, the support that the equity market has really enjoyed in the form of super easy accommodative policy over the last decade is really fading away. And I think it's a moment of reckoning for investors at the moment, Tom, and the jury's still out on which strategy is going to win moving forward, but it's certainly something that investors are starting to struggle with and take into account right now.
Christina, I know you know the Fed and FOMC really couldn't have flagged better for the moment about what they're expecting to do for the rest of the year. But let's just remind everyone, the stakes are really high, because if they move too fast, then we risk a recession on rates. If they move too slow, then we could have this, you know, entrenched inflation. So what's the right way for the market to be positioned ahead of that big FOMC?
Well, Francine, I think it's definitely investors are thinking about the short term. So thinking to the March meeting and what they're going to do in terms of the move there. Is it going to be 25, potentially 50? But also thinking longer term. And we're talking about 18 months ahead, where we're starting to see some signs of markets thinking about the longer term implications of a fast pace of Fed tightening and what that will mean potentially for longer-term growth and inflation prospects. And I'm talking, of course, about this potential idea of a policy mistake. Definitely what you're talking about, Francine. If the Fed moves too fast, there is very much this real risk of longer-term growth of being hurt by such a tightening pace. But then if they move too slow, there's definitely the question of whether inflation will really run away from already very high, multi-year high sort of levels. And so it is very much a high wire balancing act for the Fed here, and definitely investors watching both short-term and longer-term implications adding to that.
Ralph, let's bring you in at this point. Do you think the Fed blinks in the face of the volatility that we've seen in the last few days?
I'd be surprised. I think the way that the Fed is going to look at it is to make the case that equity markets are still up very comfortably from where they were a year ago. They're up even more comfortably from where they were pre-pandemic. If we have some interim correction in the face of the inflation challenges that they face, I think it's difficult to make the case that what we've seen so far is enough to make them blink.
Ralph, what would you be buying, if anything, right now? So, you know, we have some great technical charts that Valerie has also put together. You know, depending on what we hear from Fed today, how does the market essentially move?
I think the key question is still whether the market needs to reprice the total number of hikes that are likely to be delivered for this year. We can spend an awful lot of time talking about whether 25 or 50 in March are more likely. I'm definitely leaning into the 25 camp. We can talk about whether or not there's a risk that they hike in as a follow-on in May or in July. But at the end of the day, we are pricing in less than 4 hikes for the year as a whole. And that, I think, still strikes me as being conservative. And the distribution of risks, in my mind, is quite clear that the risk is that they end up doing more than that, not less. And so for choice, to my mind, the key variable to watch for tonight is where December FOMC OIS is trading. So what are we pricing in for where Fed funds is going to be at year end?
Christine, I want to bring you back in on the question of earnings, because it's being overshadowed by what's happening with the Fed, rightly so, many would argue. But the earnings picture has been mixed. And the reaction to Microsoft, they beat, but there was concern about the cloud business. They had to get that reassurance from the executives.
Absolutely, Tom. And I think it's a great example of investors really holding these companies, particularly the tech sector, reporting right now to a higher standard. Now that we're kind of in this environment of easy monetary policy going away and higher yields, I think investors are just demanding more in terms of these companies presenting their fundamentals. And, you know, I think Microsoft was a great example of that because, yeah, it wasn't necessarily a bad set of earnings. You know, it was quite encouraging, but the initial reaction to that until they reassured in their investor call was quite negative. And it speaks to the current jitters in the markets that are here at the moment, but also how investors are thinking about these companies moving forward. It really will be all about the fundamentals and whether they can stand on their own without the help of super easy Fed policy.
Yeah, closer scrutiny. The bar has been raised, certainly, for many of these companies, particularly those in the tech space. Bloomberg's Christine Aquino, thank you for breaking down the key themes that we're watching today. Ralph Preuser, Global Head of Rates Research at Bank of America Global Research, I'm pleased to say, stays with us. Coming up, Russian troops remain stationed by the Ukrainian border, but the dance of threatening sanctions and requesting exemptions is in full flow. Geopolitics next. This is Bloomberg.
Do you think that electric vehicles could reach 10% of the American market by the end of this year?
That's difficult to say, like you said, because it'll be both, not only demand, based on the demand we are seeing for our vehicles, and the rest of the industry is seeing. It feels like the demand is certainly there. But the question will be how quickly can we, all of us, execute to build capacity to meet that demand. And that's what we are very busy doing. Within the next 24 months, we expect to get to about 600,000 battery electric units globally. And that's before our bigger investments that we're making in Kentucky and Tennessee, both for batteries as well as assembly, come online, because they don't come online until about 2025.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Adrian Mitchell is reshaping Macy's mix of brick and mortar and digital commerce.
We have to let go of the traditional legacy department store habits and evolve with the customer.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
Welcome back to the Open. We are 14 minutes into the European trading day this Wednesday. The markets across the benchmark European Stock 600 gaining more than 1%, building on the modest gains that we saw across the European equity space yesterday. Every single sector in the green, travel and leisure, basic resources at the top of the list. We are, of course, awaiting the FOMC and guidance from Jay Powell. Will he be clearer in terms of the rate hike scenarios, the timetable? March looks likely it's going to be baked in, but will we get more aggressive commentary from Jay Powell, or will there be a dovish tone to what he has to say? Also looking for anything, of course, on the balance sheet as well. Let's check in on some of the stocks on the move at the Open with the one and only Danny Berger. Danny, what are you looking at?
Well, I am first looking at Wizz Air. This one has been very, very volatile when it comes to its action this morning. Right at the Open, Wizz Air fell more than 1%. That's after their earnings. They posted a loss for the third quarter and projected some difficulty still going into March, considering that there's some uncertainty about when people are going to be happy and comfortable getting back on flights. Now, we are seeing just value type stocks turn around today in general, so it might be benefiting from that travel and leisure, as you pointed out, Tom, at the top of the board when it comes to sectors. Vestas Wind System down 1%, giving their guidance for the full year. That range missing estimates. The estimate was for 16.6 billion euros. At the high end of their range was 16.5. Low end was 15 billion. So easily missing what analysts were hoping for, really citing the continued supply chain crunch and higher costs. Finally, Todd's luxury goods still going strong, up 8.25%. Everybody wants to not only buy watches, but Todd's shoes, leather bags. Citi pointing out that this really is a confirmation of their strategy in the third quarter of really improving their merchandising, continuing to take effect. Francine, Tom?
Danny, on all things re the corporates, the stocks that we're watching, and the education when it comes to luxury from Danny, educating me on this sector continues, particularly around the shoe space. Danny, thank you very much indeed. Okay, let's turn to the ongoing tensions then around Ukraine. President Biden has again mentioned serious economic consequences if Russia goes through with what he says would be the largest invasion since World War II. Russia has repeatedly denied such intentions, and the Kremlin has accused the US of breaking down relations by threatening such sanctions and exacerbating tensions by priming American troops for deployment. According to documents seen by Bloomberg, Germany has pushed for an exemption for the energy sector if there is a move to block Russian banks from clearing US dollar transactions. Let's go then to our Europe correspondent, Maria Tadeo, on the ground in Berlin. Maria, we know that they're trying to present a united front, but the granular details of that unity is up for question. What do we know so far about how aligned the leaders of France and Germany are, certainly with their partners in NATO?
And Tom, that's so important. Yesterday, we know that Emmanuel Macron and, of course, Olaf Scholz had a working dinner here in Berlin. The image that they wanted to present is that we're very aligned, we're very united
on this. Again, this is facing criticism that Europe has been all over the place when it comes to Russian foreign policy. And they've said, we're incredibly coordinated. There will be sanctions. There will be a big price to pay. But nonetheless, we still believe there's a diplomatic path ahead. And tomorrow there will be a call between Emmanuel Macron and Vladimir Putin. That is the official line. But of course, behind the scenes, we know that there are tensions that are escalating because not every country is going to be affected the same way. And economically speaking, this is going to be much more painful for a country like Germany than it would be for the United States. And that perhaps also goes back to the point that you mentioned earlier, the fact that Germans are saying perhaps we need to make exemptions for energy-related costs if Russian banks are not able to work in dollars. The other thing that I would point again is that risk of personal sanctions of Vladimir Putin, which is a fascinating line, of course. We don't know what he owns, how much assets he has under control. So it's, you know, in many ways, good luck going after Vladimir Putin.
Yeah, Maria, this is also one of the reasons why I'm in Rome, is trying to figure out exactly the relationship between Vladimir Putin and Italy. And I was looking at some numbers. So trade increased some 54% year on year from January to November. And at the same time, what Italy has sold to Russia has also significantly increased. And really at the forefront of everything we're looking at is whether Vladimir Putin is also trying to put pressure on big companies and chief executives to be on his side, which is why this call here in Rome is very controversial between Vladimir Putin and certain chief executives. Is this his tactic, Maria, actually trying to divide the West?
It is, and that's exactly what many would say he's been doing for a while now, with the energy, with the economy, with the troops, and with the mixed messaging that we get from the Kremlin. And it's also interesting, as you said, Francine, that he wants to have this call with Italian CEOs, and the Italian government is saying best not do it. This is something that we've also heard from a number of other countries, suggesting that at this point, it really is not the time to do business in Russia for the time being. This is the irony of this whole thing. And particularly here in Germany, pressure growing for business to say and take a stance on where their operations in Russia are heading.
Okay, Maria today on the ground for us in Berlin, of course, following all the twists and turns around the geopolitics of this and the alignment or lack of alignment between European leaders and NATO. On the question of Russia and Ukraine, Ralph Preuser, Global Head of Rates Research at Bank of America Global Research, is still with us. Ralph, does any of this change the calculation for the ECB? When we talk about the economic impacts on Europe, if we get the worst case scenario, if we get a Russian invasion followed by severe, significant sanctions, what is the economic impact across the Eurozone, and does it change the calculus for Madame Lagarde?
That's a very good question, because, you know, these additional shocks that you just mentioned would come on the back of a very significant supply shock, which is, you know, the driving force behind the changing messages that we've got from central banks, in particular because of the you know, pass-through from energy into inflation. So if we were to see a significant additional hit to energy prices and therefore significant further upside pressures to inflation, all that's probably going to do is further divide the Governing Council at the ECB between those who would argue that that justifies the beginning of a policy normalization process, and those that argue that this is a very significant shock to, you know, household incomes, and therefore could actually generate downside risks to inflation further down the line if it's not followed through by higher wages. So it would certainly make Madame Lagarde's job considerably more difficult.
Yeah.
But relative to what is currently priced in, I struggle to see how we can really meaningfully accelerate the pricing of policy normalization for the ECB any further.
Ralph, and I was going to ask you actually in terms of these, you know, this pressure on commodity prices overall, how much of it is already priced in by the markets? So, you know, how much of a possible Ukraine invasion or actually heightened of tensions is priced in the markets?
I would say quite a lot. You know, if you look at what the break-even market or what consensus is expecting for inflation beyond 2022, both consensus and market pricing expects inflation in Europe to come back below 2% in 23, in 24, and 25. So the market is pricing this, and consensus is viewing this, I think, quite accurately as predominantly a supply-side shock that is likely to only leave a temporary imprint on inflation. So inflation markets, I would say, are priced probably correctly. But what the market is then doing is it's translating this temporary supply-side shock into the beginning of a hiking cycle that actually is quite persistent. So we're pricing in the first hikes for year-end this year. We're pricing in the end of negative interest rates by the middle of next year, and then the hikes just keep following. And that is not really what I would argue is consistent with what a consensus and the market is telling you about inflation.
Okay, Ralph Preuser, Global Head of Rates Research at Bank of America Global Research, thank you. Doesn't see the Fed blinking today and the complexities for the ECB if geopolitics worsen when it comes to Russia. Coming up, despite the tough big tech environment, US giant Microsoft has reported a record quarterly revenue with bullish forecasts. We can get more on that. The details. This is Bloomberg.
City.
Here in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Welcome back to the Open. We are 25 minutes into the European trading day. Risk on here across Europe, gains of more than 1.3% as we await the FOMC. But the big corporate story at the moment, Microsoft reporting earnings after the bell. The software computing and gaming behemoth reported a record quarterly revenue with bullish forecasts that paired initial post-market losses. Joining us now is Bloomberg's Laura Wright. Laura, what were the key takeaways for you from these earnings?
A record quarterly revenue for Microsoft, surpassing $50 billion for the first time. The market, however, Tom, is on edge, even though the intelligent cloud part of Microsoft posted numbers in line with the street's forecast. The Azure part of that division fell short of extremely bullish whispers. That said, Azure cloud numbers, 46% revenue growth year on year. The Activision Blizzard deal we learned about last week, no update regarding that deal, but it puts Microsoft in a unique position in the gaming metaverse in the future. Tom.
Okay, Laura Wright, thank you very much for breaking down the Microsoft story for us. Plenty more coming up. We're going to be focusing, of course, on Italy. Francine Lacroix is on the ground. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las mediciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Fed Day, European stocks and US futures climb ahead of today's meeting. Jay Powell will almost certainly signal a March hike. The big question, though, is how big? Raising the stakes, President Biden weighs personal sanctions against Vladimir Putin if Russia invades Ukraine. Germany seeks an exemption for energy. Plus, eyes on Italy. The second day of voting gives no winner in the presidential election. Prime Minister Mario Draghi remains the lead candidate. And Francine Lacroix is on the ground in Rome for us. We're at a very dull backdrop, let's face it. We want to talk about Mario Draghi, Francine, of course. We want to talk about the stability. We're going to talk about the reform agenda, energy. But I also want to ask what you had for dinner last night in Rome and whether you've loaded up on your Roman espressos this morning.
So, I mean, espressos, yes, that's done. I'm like on, double espresso number 2. It's fantastic. We're caffeinated, hydrated, ready to go. I arrived too late for dinner, but it's funny because when you speak to, a lot of viewers were like, I know it's an important story about Italy. We need to talk about also energy dependency of Europe, and we have the perfect guest for that. But get out of the shot. I just want to see beautiful Rome because, it doesn't disappoint. Rome never disappoints. That's the #1 rule in Europe. And then we can talk about the presidential election, stability in the markets, stability actually for this EU fund, which really rests on Mario Draghi or his potential successor. And then we need to talk Russia, energy, and the fact that the Italian government would rather some of the state-owned companies not get on a call with Vladimir Putin later on.
Yeah, and I know you've got a great guest coming up who's going to dig into these topics. And the question really, and you've been pointing to this, is whether the markets have been complacent about Mario Draghi and his position within Italian politics.
Yeah, absolutely. I mean, if you look at the stability of Italy that we've enjoyed, look, it's all relative because it's been in the last 11 months since Mario Draghi was in charge. But it also is because a lot of these fascist parties, 10 or 15 that we really need to take into account, gave him the support that he needed. Whoever comes next, even if they're just as well regarded as Mario Draghi, may not enjoy that support because politics is a fickle thing. People are then thinking about elections and though maybe will be less cooperative with whoever becomes prime minister.
Okay, we're going to be back with a freshly caffeinated Francine Lacroix on the ground in Rome for us with that beautiful backdrop in just the next few minutes. But let's get caught up on what's happening in the markets with Danny Berger. Danny, it's bullish here in Europe. It's risk on. You would have thought maybe investors would be waiting on the sidelines ahead of the FOMC. It doesn't seem to be happening.
No, it's surprisingly bullish, absolutely. I think that is a really good way to describe what's going on because into the FOMC, we have seen a lot of chop in this equity market, be it in Europe or the US, this yo-yo of market where a lot of the weak hands seem to have folded. unfolded. So positioning washed out. So you'd expect, as Tom says, that you'd sit on your hands waiting to hear what the Fed has to say. Not so in Europe, where the main index, Stock 600, is up some 1.5%. What is leading that when it comes to the regions? It really are these more cyclical regions. DAX up 1.8%, followed closely behind by the CAC and FTSE 100 as well. That's up 1.5%. So let's dive into the sectors, because this is where it gets interesting. Almost every single sector is in the green, save for this one on the bottom. It's consumer discretionary and goods. This is a very bullish picture. The fact that we'd have everything from tech to travel and leisure and energy up. Though when you look at what's on top here, there is a distinct cyclical play. Travel and leisure, even though we had Wizz Air reporting today, disappointing numbers, saw a loss, see some trouble ahead until March. Even that stock is higher. We're also looking at energy, banks, again, these cyclical type names. Technology, it's in the middle of the pack here, up more than 1.5%. We had Microsoft earnings yesterday, as well as Texas Instruments. So be it cloud or be it semis, some support coming there. But yeah, it would seem that, Tom, despite the fact that we have a Fed decision that could really shake things up in these equity markets, plenty of folks out there happy to go in and buy.
Yeah, and as you say, Danny, underscoring that cyclical tilt. And of course, earnings still in the thick of it. We've got Tesla coming up later today, which will be fascinating as well. Given what we saw from Microsoft and the reaction from investors there, the high bar that they have set. Francine, let's get back out to Francine Lacqua then in Rome. And Fran, you have a fantastic guest who can kind of break down the implications of what's happening politically, but also the geopolitics of Russia and Europe.
Yeah, it's really, we want to focus on Russia a little bit. Now, just the state of play for the presidential election, and a reminder to everyone, don't be too jealous, because it is beautiful background, we're caffeinated, but it's also very, very cold, about 2 degrees Celsius. Now, Italian lawmakers have failed in another round of voting to elect a new president. Now, that's already been 2 votes so far this week. Both failed to agree on a consensus candidate. There's another vote today, and then we go into tomorrow and Friday if we don't have a vote today. But what's also really interesting is that phone call, potentially between Vladimir Putin, that was organized back in November. Only yesterday, we found out that it would go ahead today, and it's between Vladimir Putin virtually sitting in Russia with a number of Italian chief executives. Well, I'm delighted to be joined by Paolo Scaroni. He's Rothschild deputy chairman, but for many years, he was also in charge of Eni, and he really knows everyone in Italy and has a very good sense of this energy conundrum that we're seeing at the moment between Russia and the West. Paolo, as always, thank you so much for coming on. Now, there's a very controversial call, which was basically arranged in November by, I think, private chief executives, the Italian-Russian Chamber of Commerce, to start a dialogue with Putin. Does it look bad for Italy in compared to its Western allies?
Well, it looks a little bit inappropriate at this time, but it has been organized a few months ago, so people think that they should keep the engagement. Now, this shows that every time we talk about Russia in Italy and generally speaking in Europe, we are kind of puzzled between the will of being aligned with the United States, but at the same time remembering that Russia is so important for us.
Okay, so what's the right way? First of all, I mean, you know Vladimir Putin, you've done business in Russia. I think you also, have met him personally on a number of occasions.
Many times.
Is he trying to divide the West? I mean, is this a political move to get into Ukraine, or actually splinter allies that have, had a stronghold against him?
Well, from my point of view, Putin is very much a nationalist. And the Ukraine has been part of Russia for the last 3 centuries. So the fact that today the Ukraine is separated from Russia and might even be part of NATO is something ununderstandable for Putin and for most of the Russians. There we are, no? And from this point of view, Europeans have to cope with this in one way or the other.
So Germany is a lot more friendly to Russia at the moment than other countries. Does Putin even care about the EU, or is he just going straight for the US?
Well, I think it cares about the EU because there is so much commercial activity between the EU and Russia that they have to take care of it. But at the end of the day, gas is the key issue that makes very difficult politics from Europe towards Russia.
But so what does it mean for going forward? I remember we've had a number of conversations over the last decade, even with, a lot of chief executives saying we need an energy policy put in place by the EU so that it's less dependent, because that really underpins any economic growth, it underpins any, even returns for companies. Why do we not have that now?
Well, it's not something we can invent in a few months. In the last 50 years, we've been moving towards gas. We import 30% of our gas from Russia, and some countries like Austria or Finland import 100% of their gas from Russia. So our houses, our hospitals, our electricity depends from the Russian gas a lot. Now, we have to understand that if you are not independent in terms of energy, you are not politically independent. This is what's happening in Europe. Now, how do we restore an independence politically and energetically? It will take many, many years. It's not something which might happen in the next few months.
But Paolo, if the U.S. is so intent on actually, keeping a handle on Vladimir Putin, why is it selling a lot of the gas to the Asian markets and the Asian countries instead of selling it to Europe?
Well, it's selling to who's paying the highest price, of course. Asia is paying a very much higher price. Remember, just to give you an example, 15 million houses in China have moved from coal to gas. This has increased consumption dramatically. Prices have been shooting up. And of course, private companies in the US are sending the gas where they get the best price.
Yeah, but then Europe doesn't have a chance.
Europe does not have much chance, I have to say. No, it's not easy to say. It's not very nice to hear about that. But I think that Europe politically is not independent towards Russia. This is something we have to understand and to cope with.
So how should we handle Russia? If we come from the premise that actually Europe is very dependent on Russian gas, how do you deal with Ukraine?
Well, how do we deal with Ukraine? This is the major issue. I'm still hoping that nothing happens in the Ukraine, but if something happens and if the gas coming from Russia stops coming through the Ukraine, it's not a big problem. But if all the Russian gas will stop coming into Europe, we have a major problem to deal with.
Paolo, talk to me a little bit about the presidential election. So at the moment, the market is largely ignoring it. They actually, expect some kind of stability. I guess some people think that whether Mario Draghi is president or prime minister, at least he'll keep an eye on the situation. Are we underestimating the political factions and the instability that could come with this vote?
Well, I don't think so. Listen, of course, the Italian presidential election are a little awkward for a foreigner. No, it's a very complex mechanism, but at the end of the day,
secret.
No, but at the end of the day, it always produces good results. No, we are very happy about Mr. Mattarella, our president. I can tell you that if we had met one day before the election, Mattarella was not on my list of the potential presidents. So at the end of the day, it's a complex mechanism which generates good presidents. It will be the same thing this time. In terms of instability, I don't see any instability. Nobody, apart from one party, wants to go to elections in 22. So any government will have approval from the parliament from now until March of 2023.
So if you had to choose, would you put Mario Draghi as president or would you keep him as prime minister?
No, I probably would put him as president because I think that 7 years of Mario Draghi as president of the Republic will give us an international credibility that nobody else can provide us. But still, I understand also to have Mario Draghi as prime minister will ensure us to be well managed in the last crucial 12 months.
Okay, Paolo Scaroni, thank you so much for joining us. We're freezing, so he is an absolute trooper, Mr. Scaroni, for having joined me on this terrace. Always straightforward in answering his questions. We'll have plenty more, of course, Tom, throughout the day here in Rome. And again, we don't know whether this phone call between Vladimir Putin and chief executives in Italy will go ahead, but it's one of the most interesting political things that we're looking at in Italy.
Yeah, and as you unpack there with your guest, it really points to the complexities in terms of the relationship. What a fantastic and fascinating interview. Fran, go and warm up. Thank you very much. We'll be back with Fran shortly. Up next, with Fed Day upon us, we're going to be asking Odo BHF Asset Management's global head of asset allocation, Gunther Western, how his firm is positioned. Don't miss that. This is Bloomberg.
did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are 45 minutes into the European trading day. Markets across Europe risk on. Gains of 1.6% across the benchmark. Every sector bar one solidly in the green. You've got travel and leisure up more than 3%, almost 4% now. Basic resources getting around 3% as well. Is this an assumption by investors that you're going to get some dovish messaging from Jay Powell, or is it more of a buy the dip after the volatility that we've seen? All eyes, of course, are on the Fed today. Markets are pricing in at least 4 rate hikes in 2022, with a 25 basis point increasingly looking likely in March. But investors also have to look through the geopolitical risk with the crisis in Ukraine. Joining us now is Gunter Weston, Global Head of Asset Allocation and Head of Client Portfolio Management at Odo BHF Asset Management. They manage around $100 billion and have just released their annual outlook. Gunter, thank you for joining us this morning. We have Francine on the ground in Rome. Let's start with the market volatility then, and how you adjust to this, how you adjust your asset allocation in the light of the kind of moves that we've seen over the last few days as we look ahead to the Fed.
Yeah, good morning. I think what's just happening is that the market is trying to work off some headwinds which have been building over the last couple of weeks, like inflation appears more sticky, central banks becoming more serious. We had this ominous spike in real yields of 40 basis points. Growth is partly hitting a temporary air pocket, and add to that lofty valuations and a bit of complacency, you got a nasty cocktail. And I think this is what is haunting the markets right now.
Yeah. Gunter, when you talk about complacency, is this also because a lot of traders are too young to remember the volatility in the early 2000s? Is it going to be a fun year to try and stock pick, or what's your biggest concern out there at this point?
My biggest concern actually is inflation and the reaction function of central banks, because you have to be quite humble. Nobody exactly knows how inflation is going to evolve. How sticky it is. Is there really a decline like most pundits expect, or is there even an increase? And with that, there might be mistakes from central banks who are facing increasing political pressures as well. Take a look at German tabloids, for example, where Madame Lagarde is mentioned as Madame Inflation. So there's a lot of pressure on the central banks right now.
Gunter, is Europe a good place to shelter at this time? European equities?
Not exactly to shelter, because if the U.S. market is catching a sneeze, I think we can catch a cold. But I think this rotation theme, what we have seen over the last 3 weeks or so, was value cyclic is outperforming. This is something which has legs, and this could lead to a continued outperformance of Europe, because we have a completely different sector distribution or contribution like in the US. So there are chances there, and I would stick to Europe, and I would stick to value and cyclicals for the time being.
Gunter, I have a million questions on like Italian politics and Ukraine, but my underlying question, I have to remind everyone, Roma is bellissima. Gunter, is what are we misunderstanding about energy prices? Again, if we have shocks because of Ukraine, because of what's happening with Russia, or because of something unexpected going on in politics, is the market prepared for it? How much of it is already priced in?
I think he's not. The market is not completely prepared for some sort of invasion in Ukraine, but that would come at a big, huge cost for Mr. Putin as well. I mean, the coin is two-sided. If gas imports stop, Russia will not make any money on that. But I think this risk has not been priced completely. It's a little bit underlying. It's a tail risk, I would say, and I'm still hoping for some sort of solution on the political scale.
Gunter, how do you fold all of this into your views on fixed income? Where do you want to be across the yield curve, and how are you factoring in the Fed's decision to start to unwind at least the balance sheet at some point, maybe June, July of this year?
I think in the short term, it's sort of maximum hawkishness priced in. So I would even expect a relief today, because market has partly pricing and 50 basis points in March. I don't think Mr. Powell will support that. But longer term, the question still remains, because markets expect quite a rapid reaction, like 4 hikes in 22, 3 hikes in 23, and then they are almost done. So there's a big gap still between the Fed thoughts and the market expectations. And I think this is something where the market has to adjust. But this is a slow process, which we will see as the Fed starts hiking during 22. So for fixed income, I still think this real yield increase has legs. And so I would position cautiously on duration. For Europe, for the Eurozone, I think we will see some sign, kind of yield curve steepening, as the short end is still hammered at this level. The ECB has much more leeway than the Fed and will not hike rates in 22, maybe later in 23, but not before that.
Okay, so yield curve steepeners and a bias towards the cyclicals and value, certainly here in Europe. Gunter Weston, Global Head of Asset Allocation and Head of Client Portfolio Management at Odo BHF Asset Management. Thank you for those insights this Wednesday morning. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. French far-right leader Marine Le Pen, who's a front-runner in April's presidential election, opposed sanctions on Russia and warned against a new Cold War led by the United States.
I don't believe in sanctions against Russia. They're counterproductive. A new kind of Cold War has been created, and the EU followed the United States. The reality is that Russia has been pushed into the arms of China. I think there is far greater danger in pushing Russia into the arms of China than in maintaining diplomacy with Russia and instead absorbing it into a European process.
New York State has seen an 86% decrease in COVID cases since its January 7th peak, Though deaths and hospitalizations remain elevated, rates of severe illness and death fell in the US during the Omicron surge compared with the earlier Delta wave. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. Coming up next, we're going to be scrutinising Boris Johnson and his future. More details on that police investigation coming up. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. Let's focus on UK politics. Boris Johnson will face more questions in Parliament today about alleged parties at Downing Street held during lockdown. That's as police are now investigating the potential breaches. Lizzie Burden has the latest. What do we know? What are we expecting today, Lizzie?
Well, Johnson now faces two investigations. So as you mentioned, you've got the criminal investigation by the Metropolitan Police. That was announced yesterday, and those results will take weeks. And then you've got the report by senior civil servant Sue Gray, and much of that can actually be published while the police report is ongoing. So Boris Johnson has said he'll make a statement to the House of Commons and take questions when it's published, but it doesn't look like that's going to come in time for Prime Minister's questions at noon because Downing Street hadn't received it overnight. So where does that leave us? Well, bear in mind that Johnson has already admitted to attending the garden party in Number 10 and having a birthday party. So what we're waiting to find out is, did he breach coronavirus rules, break the law, and mislead Parliament?
Lizzie Burden across all things UK politics. Thank you. Plenty more coming up. Stay with us. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Our base case is no disruption. It's mutually assured destruction. It's not in the interest of any party to stop flows of energy through Ukraine.
Employment is still well below the pre-pandemic trend, but everything else about the labor market says it's very tight.
We have no intention of putting American forces or NATO forces in Ukraine. But as I said, there are going to be serious economic consequences if he moves.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome, beautiful Rome. Here's what's coming up on today's program. We focus, of course, on Fed. It's the big Fed day. Stocks climb ahead of today's meeting. Jay Powell will almost certainly signal a March hike. The question is, how big? Raising the stakes, President Biden weighs personal sanctions against Vladimir Putin if Russia invades Ukraine. Germany seeks an exemption for energy. And of course, we're live here in Italy. You can see it behind me. It's a Campidoglio. We're in Rome, and the second day of voting gives no winner in the presidential election. The Prime Minister, Mario Draghi, remains the lead candidate. I'm live in Rome this hour also to talk about Ukraine and the relationship with Chief Executive and Vladimir Putin. Now, first thing is first, let's check in on the markets. Joining us is our Danny Berger. Danny, all eyes on the Fed.
Exactly. And despite what you'd usually expect for market day like this, where you'd wait for the Fed, perhaps not make a lot of moves, it is a perhaps surprisingly bullish day here in Europe. The Euro Stoxx 60 up more than 1.5%. And volumes are very strong as well. They're easily above the average volume for the past 30 days, rather. So some conviction behind those moves as well. Perhaps it's somewhat earnings fueled. We did see earnings yesterday from, of course, one of the big FANG stocks, Microsoft, and that lifting post-market session. We're seeing NASDAQ futures up 1.4%. Meanwhile, we are seeing some dollar strengthening heading into the decision today. I was talking to James Lord of Morgan Stanley earlier this morning, who said that the top is in the dollar. That bullishness is fully played out. Still, we are seeing more buying when it comes to the dollar versus the euro, and your 10-year yield up by 1 basis point. Now, heading into this Fed decision, there is some hope that perhaps we'll have a logical response to the Fed. That's because a lot of positioning has been wiped out. It's been a clean slate when it comes to bond positioning. This is JP Morgan client positioning on the 10-year yield, and on the 10-year rather, and we've seen that the shorts that have stacked racked up over the past month or so have started to come off. Again, the idea here is we've had a bit of a cleansing in this market. So we are back to neutral heading into the Fed decision, and therefore can react appropriately to what they say. It's not just in bonds, I should say. We've seen something similar in equities. According to Deutsche Bank, we've seen positioning move to underweight in equities for the first time since we emerged out of this post-pandemic hole. So neutral on bonds, neutral on equities, which means, Francine, we have a very interesting setup into today's decision.
Yeah, we certainly do. I can't wait, actually, for FOMC. Now, let's talk a lot more about the market standing. Thank you so much, as ever, Danny Berger there in London. We're joined by Thomas Kosberg. He's senior U.S. economist at Pictet Wealth Management. Thomas, a million questions, of course, about positioning ahead of FOMC, but also the fact, good morning, that the market is very focused on interest rate increases. What seems to me the most interesting is maybe quantitative tightening. Are we underestimating the fact that we could have a surprise of how much the Fed will continue bond purchases?
Right, so the main conclusion today should be a signal that they intend to hike rates in March by, most likely by 25 basis points, but the persistence of inflation and also the strength in wage growth does put a risk of a 50 basis points rate hike potentially later this year, even though I still believe that the Fed will be very gradual in its rate hikes, and I would still expect a pace of one rate hike per quarter, but the risk is that they do more than that given wage growth and also the inflationary pressures, including due to Omicron.
Yeah, and Thomas, this is one of the most important things, right, is the fact that actually the market seems to be fairly certain that it's 25 basis point increases each time the Fed hikes. I mean, does the composition of actually, and the gradual increase, we could have 10 basis points and then a 50 basis points, does it matter, or is it more the end game of where rates are by the end of 2022?
What matters as well is the balance sheet, right? Because we know that if they announce a balance sheet runoff, that's also equivalent to additional rate hikes. So if they do 25 basis points per quarter on the rate hike side, but also on top of that, if they do the balance sheet runoff, that's additional tightening. So, we should take that into account as well. I mean, it's a pretty aggressive pace if they do both at the same time. And by the way, that would be quite new to do both at the same time, because last time around, when they were announcing, things on the balance sheet, they would pause on the rate hikes. But this time around, they seem to go on both ways at the same time, announcing a balance sheet runoff and some rate hikes.
Thomas, give me a sense of actually what the biggest policy mistake right now would look like. We had a good conversation with Philip Hildebrand, and he says, look, central banks just have to be much clearer in explaining why we have this higher inflation. I know we talk a lot about, if the Fed hikes too soon or too aggressively, then it would, possibly bring us into a recession. But if they wait too long, then we have, inflation that's entrenched. But how much, percentage-wise, is this inflation in the U.S. due to supply chain concerns, even because of Omicron?
Well, I think part of the hawkish pivot from the Fed comes from two things. First of all, they realize that the labor market is actually very tight. We're close to full employment. That's quite new. So they believe that the participation rate will not bounce due to structural reasons. And point number two is that they also believe that inflation is mostly driven by supply chain issues, but also driven by strong consumer demand. And, by tightening policy, they would also like to deflate a bit this very strong consumer demand. And I think that's quite the new thing here. And the question today is, to what degree do they want to go in deflating consumer demand, and how do they want to achieve that? Do they want to target the wealth effect through stocks and house prices to deflate consumer demand or not? I think that will be the key question.
Yeah, very good questions. Do you think we'll have more answers on that today? Has the Fed been pretty clear in its communication to the markets?
Right. I mean, it would be good to see whether they believe, that inflation is mostly a supply chain issue, or whether consumer demand plays a role or not. I think the Fed has not been so clear about that, so it would be good to have more answers. And point number two is, obviously, we would like to know the Fed's view on the stock market and stock market valuations, and the role it plays into the wealth effect, and the role the wealth effect plays into boosting consumer demand and potentially leading to inflationary pressures down the line. So I think we still have a lot of questions that we want to know more about. Yeah.
Yeah, we certainly do. Thomas, thank you. Thomas Koster, they're helping us trying to ask some of the important questions that we hope we'll have answers to from the Fed. Senior U.S. economist at Pictet Wealth Management. Now, coming up, we'll have plenty more from Italy. Beautiful Italy. We're fully caffeinated, fully hydrated, ready to tackle another day of voting. Italy's lawmakers go to the ballot once again after failing to elect a new president for the second day in a row. But we also talk about the Fed. We talk about inflationary pressures and, of course, the role that Italy has in dealing with Putin. There's that call between chief executives and Vladimir Putin, Italian chief executives, the government saying this is not a great idea, but actually Kremlin confirming it will go ahead. We'll talk about all of that shortly. This is Bloomberg.
Risk number one, no zero COVID, and this is specific to China. Why is this the top one in 22?
Despite this massive case explosion with Omicron, the United States, Europe, the developed world is going to feel much more normal, finally, within weeks. But that is really not the case at all in China. They are trying harder and harder to impose strict quarantines, which is going to have big impact on their economy. And it's not going to work well, but Xi Jinping can't back away from it.
How much do you think there is a risk of that being extended globally in terms of supply chain issues and just a slowdown in general?
If they're shutting down cities, and that will include significant amounts of production, that means that we're going to continue to have supply chain challenges across the world in 2022. It also means that inflation has the ability to persist.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in Rome. Beautiful Rome. Now, the focus here, of course, is on the presidential election, but it's also on Ukraine. Now, Italian lawmakers have failed in another round of voting to elect a new president. Now, there's already been 2 votes, Monday and Tuesday, and then they both failed, of course, to agree on a consensus candidate. Today, there's another vote, and if that doesn't prove conclusive, there will be another one tomorrow as well. Now, at the same time, we watch, of course, Italy's relationship with Russia, and the Italian government has asked companies not to hold a conference call with Vladimir Putin that was scheduled for today, though just this morning the Kremlin said that the meeting would be taking place. It has Rome buzzing. Now we're joined by Fabrizio Pagani. He's former chief of staff of the Italian Minister of Economy, Finance and Economy Minister Piercarlo Padoan. He is also global head of economics and capital market research at strategy at Muzinich. So he understands the inner workings of government, but he's also an economist. He's also the founder of M&M it's not the chocolate things. It's a great association, actually, you know, trying to influence policy in Italy. Thank you, Fabrizio, for coming on. Look, there's a number of things that are extremely complicated to unpick, especially maybe for international investors, which is the relationship, the long-standing relationship that Italy has with Russia. And Europe is dependent on Russian gas. At the same time, there's maybe a strong political message that needs to be sent to Ukraine. So economically, how do they do that?
Well, it's indeed a very peculiar moment and a very complicated moment, given also that the government, the parties in Italy are very much focusing in this very moment on the election of the President of the Republic, which is one of those institutional challenge and opportunities which the Italian constitutional framework has. The relationship with Russia is very strong. Italian export to Russia and Italian import from Russia, particularly gas. Italy is dependent for gas supply not only from Russia, because we have also other suppliers, and there is also a good energy mix in the country. However, it cannot be denied that the Russian gas plays a very important role. And Italy is a very manufacturing country, so it's energy thirsty. And we have seen that the raise of gas prices is taking a toll on the Italian manufacturing. If you talk to entrepreneurs nowadays, the major preoccupation is indeed commodity prices and energy prices. They have a full order books for 2022. They are not concerned about demand. They had a great 2021, big export, record on export for Italy last year. But this year, the question is big revenues, but smaller margins.
And I know you're an economist and not a political analyst, but so what's the right way for the government to deal with this, right? This is, complicated because you need lower energy prices, but you also need to, I guess, support your allies in dealing with Russia. So what's the prescription that you would give this Italian government or the next one, depending on what happens with the presidential election?
Well, I think we need to work on the medium term in a further diversification of supply, that's for sure. And I don't think Italy can do anything else than talk with the European allies and the transatlantic alliance on how to deal with these issues. It's not something which can be solved by one single country. This is something which has to be done within the alliances Italy has been in the last 60 years.
Fabrizio, I've had a number of guests coming on and saying, like, look, it'd be not bad to have Mario Draghi as president because it's more than a ceremonial role. It's 7 years. It focuses stability. I feel like they would be underestimating what it would take to form a new government that has enjoyed the stability that Mario Draghi as prime minister has had.
I think you're right in the sense that what really matters for Italian economy and more generally also for financial markets is political stability and the continuity of the policy action which has been taken by the Draghi governments. Policy measures vis-a-vis the pandemics in order to contain the pandemic, policy measures in adopting and implementing the Next Generation EU, the Italian plan, of course, and also a number of reforms which are the key to raise the baseline of the Italian growth. So indeed, it will be, this is a challenge. At the same time, I think whatever the position single personality have, what market will focus is indeed the continuity of the policies.
Do you think the policies can continue, or will different factions then try to look for elections and not be so supportive? I mean, can you go as far as saying that actually the success of Italy in accessing the EU funds will largely determine whether the EU fund rollout is a success overall?
Absolutely. I think Italy is the litmus test for the success of Next Generation EU for two reasons. First of all, is the first beneficiary, is around 200 billion, and is also the largest economy benefiting from that. Italy is the country which has applied for the loans, not only for the grants, which makes a difference, for example, vis-a-vis Spain. And Italy is a country which needs more this combination of reforms and investment. The Next Generation EU is not only investment, it's not only money to infrastructure or project, it's also the need for reforms. and reforms of the judicial system, public administration, everything. In Italy, we have a problem anytime in which the public sector and private sectors have to work together. There is a lot of friction there.
But even if Mario Draghi stays prime minister, I mean, so far he's enjoyed the support of all the governments, the parties, right? The parties have gone largely behind him. If they get prepared for elections in 2023, will they be less supportive automatically of what he wants to achieve, even if he stays as prime minister?
I don't know. I think what they should do, they should focus really on the implementation of the national plan. This is the key for this year. This is the key for Italy. It's the key for Europe. After this year is really fundamental, because the first year, last year, was the year in which the plan was presented, in which a lot of formal steps were taken, also in the implementation. But you need to go further than just adopt an implementing decree in order to really translate that into actions. Now is when the pumps get the road.
There you go. So you have to deliver when that happens.
Exactly.
Fabrizio, thank you so much for joining us. He is Fabrizio Pagani, Global Head of Economics and Capital Market Strategy at Muzinich, and his former Chief of Staff to the Italian Minister of Economy and Finance. We'll have plenty more from Rome. Beautiful Rome. I have to say it is quite cold and there's a lot going on. We'll see whether that call between Vladimir Putin and Italian chief executives goes ahead. We're just speaking with Fabrizio Pagani about the relationship of trade. I think trade has increased some 20% of what Italy has sold to Russia, including pasta, which is why the Barilla chief executive is meant to be on that call. So we'll have plenty more, of course, on the relationship with Russia, the personal sanctions that the U.S. is now threatening on Vladimir Putin over Ukraine. We'll get the latest next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that, as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the Yuan, we did see some pressure on the futures. That is now being reversed.
It's Finance Politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome to talk about, of course, the presidential election, but also Ukraine and how Italy and the rest of the West could deal with, of course, the Russian president. Now, the U.S. president, Mr. Biden, says he would consider personally sanction the Russian president if Russia moves ahead with an invasion of Ukraine. That's a big deal. We've never seen that before from heads of state. Now, Biden added that he has no intention of deploying U.S. troops to Ukraine, and the German Chancellor Olaf Scholz and French President Emmanuel Macron pledged not to give up dialogue with Russia last night. Meanwhile, Russia continues to deny plans to invade Ukraine. So for a full roundup of everything we've heard and what's more to come, with us to discuss the latest on the tensions is our Europe correspondent, Maria Tadeo, who's in Berlin. Maria, first of all, what was the outcome of the Scholz-Macron meeting on Russia? And is it, a deliberate attempt from Vladimir Putin to destabilize the West by putting all of these factions, and is it working?
Well, Francine, that meeting that we saw yesterday between the French president and Olaf Scholz, I would say had two aspects to it. One, of course, is that they really wanted to present a united front. For a week now, Europe is coming under pressure that it is essentially all over the place when it comes to Russia, that there isn't a single voice on the subject. Yesterday, both the French and the Germans said, in fact, we're very aligned and we're together in our approach, that we want to do this a diplomatic way, but if that's not possible, then we'll go for big sanctions. But the reality is, on the paper and in terms of the impact that this would have, we still don't know what the sanctions would entail. And as we reported yesterday in Bloomberg News, the Germans are said to be considering accepting perhaps or exemptions on the energy-related issues and companies. So in terms of the picture that they wanted to portray, that's one thing, but the reality is still very cloudy and very confusing, I would argue.
Yeah, it is very cloudy. It's very confusing. But actually, if you're Germany, you're much more dependent, of course, on Russian gas than some of the rest of Europe. And that is something which will mean that Europe will have a lot of difficulty in speaking and singing from the same hymn voice.
Indeed, and Francine, we've seen it, the economic damage from Germany. We'll look at the past experience also, too, when Crimea was illegally annexed by Russia. It's Germany that's going to take the big hit. We know it's going to do it on the economics. We know it's going to do it on the gas. But I would also point to another thing that to me really caught my eye yesterday. When you look at this from the German perspective and the German perception, it's interesting to see that the Germans actually feel that they are the grown-up in the room. They say we need to keep that diplomatic channel with Russia. We know that as a country, don't want to be military aggressive. And again, to some extent, and this may be controversial, but it's this cultural factor and perhaps even the war guilt that they still carry, which makes them believe that the best way to go about things is not on the military aggressive front.
Yeah, all right. We'll keep a very, very close eye on it. I mean, this is something that really matters to the markets, and we're seeing a repricing of some of the commodities as well. Maria Tadeo there in Berlin for us. Now, a lot of the focus is also on the Fed, an interesting FOMC. It's the second day it's finishing, so the focus is exactly on what we'll see from the Fed. Will they announce a further or the amount by which they will increase rates? That's probably one of the most interesting things that we could see. And if you look at U.S. futures, they're all gaining. Coming up, woke chief executives and stakeholder capitalism, how business can be more inclusive. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Fed Day, stocks climb ahead of today's meeting, while Jay Powell will almost certainly signal a March hike. The question, how big? Raising the stakes. Well, President Biden weighs personal sanctions against Vladimir Putin if Russia invades Ukraine. Germany seeks an exemption on energy. Plus, eyes on Italy. The second day of voting gives no winner in the presidential election, as Italian business leaders are set to speak with Russian President Vladimir Putin. I'm live in Rome this hour. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, the focus firmly on the presidential election, but also we try and figure out these ties between Italy, Germany, and Russia with this ongoing controversial meeting between Italian executives and Vladimir Putin on a conference call set to go ahead. Now, the markets, interesting, never dull, especially in the last couple of days, especially ahead of FOMC. Here's our Danny Berger with all the latest moves. Danny, what are you seeing?
Francine, it is a very bullish day, maybe even surprisingly so, because as you say, we're waiting for the Fed. And typically when you have people waiting for the Fed, they don't want to put on any big bets. Even so, we're seeing the best day here in Europe, at least on track for it in more than a month, up 1.8%. Volumes are also higher than average. We're seeing the cyclical type stocks like leisure, airlines, those things outperforming today, energy, materials. Also a strong day for tech, specifically the NASDAQ 100 futures up 1.7%. Earnings might partially be behind that, which I'll get into in a moment. We're also seeing some dollar strength today versus the euro down 0.1%. Again, if the Fed's going to be more hawkish, perhaps it is the strong dollar which will finally play through, something that's been struggling to really solidify its rally in recent months. And finally, we're looking at a gain of just under 1 basis point when it comes to 10-year yields. Now, when it comes to the earnings picture, I want to look at what's moving pre-market. We had Texas Instruments and Microsoft earnings yesterday. Later today, we get Tesla. All of them performing very strongly, up more than 3% across the board. Texas Instruments up nearly 5%. It is a crucial period for tech. They really need to crush expectations in order to perform well, because yes, they've fallen, but it's been a small correction. There's still about 27% premium to the S&P 500 PE multiples. You can see that in some of the nervousness in Microsoft when it initially sold off at the market open. Executives then went on to reassure about the cloud. However, there does seem to be a little bit of hope after we saw yesterday's aggressive selling in the NASDAQ that the earnings picture can help turn it around, Francine.
Danny, thank you so much. Full eyes, of course, on a lot of these markets. Our Danny Berger in London. Now, BlackRock Chief Executive Larry Fink's call that stakeholder capitalism isn't woke, and Unilever's recent investor backlash has re-sparked the debate around a company's place in the world. Well, business leaders are really increasingly speaking out on issues from climate change to politics, but not always to the approval of shareholders. Well, McKinsey's senior partner, Dame Vivian Hunt, argues that the pandemic has highlighted the interconnectedness of business and society. society, economies, societies, and of course the environment are more closely linked to each other now than 50 years ago. So let's get straight to Dame Vivian Hunt joining us now. Thank you so much, Vivian. When you look at a lot of what's been talked about with stakeholder capitalism and the idea that we can still have profit to do good, do we need to redefine exactly what we're talking about so it doesn't become too wishy-washy and chief executives don't, talk the talk but then don't follow up in actions?
Hello, Francine. You make a very important point about translating the hope that you have an integrated view of what's best for your shareholders and fiduciary stakeholders with all of your stakeholders, but you have to be able to build it into a concrete business and operating plan. We can start with definitions. Stakeholder capitalism is not in opposition to any other kind of capitalism. It is a more holistic and broader definition of capitalism. Profit and high performance are at the center for any company and economy, but it also considers and defines in really quantifiable and holistic terms value for other stakeholders in the business system, like your supply chain and your employees. So getting a definition that works and is business-led is absolutely the right starting place.
Vivian, how difficult is it actually to change supply chains? And if we bring it back to some of the geopolitics that we're living through today, Europe doesn't really have a comprehensive energy strategy that works, which is why we're so dependent on Russia. And given all the geopolitical mess that could be really at the front of what we need to deal with in the next couple of days. I mean, is that the kind of thing that we should have thought about ahead? And would stakeholder capitalism have helped in that regard?
We are at a moment of transition. I think what you can see as we live with the second, really third year of the pandemic impacts, many business leaders have begun to manage the crisis response and immediate high priority public health and employee response. Now we see two big trends as the biggest impacts from the pandemic as we manage businesses day to day. First is the impact on employees, and secondly, as you mentioned, supply chains. And now we see disruptions in the supply chains. It's probably more material than crisis response, as we saw last winter and last year. So how do you think about the supply chain disruptions, whether that be from employee absences, product stockouts, and implications across your global supply chain, or simply transparency? Am I getting the data and information we need to manage it? The point on inflation is an important one because it is the first time we're seeing a structural inflation coming in across supply chains as broadly in many, many years, and many managers have not had to deal with the degree and breadth of inflation that we'll see across global supply chains. So we see that as one of the most important areas for people to respond to. At the front line, where people pick up their products and services, things simply as stockouts and the likelihood that they might change brands, change retailers, change platforms as a result of not being able to get access to products, employee impacts, and making sure that you're able to attract the right employees and manage some of the vacancies and retention we've had, and of course, inflation and input costs, which are critical for any business.
So, Vivian, I mean, what do chief executives misunderstand about their supply chains, and what do markets and us actually misunderstand about supply chains? Because what you're talking about is a supply chain disruption because of people being off work because of COVID. I mean, sometimes it's also about geopolitics. So, if we bring them more domestically, if we have a more insular economy, is it necessarily better in dealing with your supply chains?
It will, of course, vary by industry and structure. There's no question that being able to measure and manage the operational resilience of your supply chain and its impact on your environment, employees, and communities is an important element for businesses. It has to be done in a rigorous and quantitative way. So if you're still just managing inventory supplies and costs, for example, those are important, but you have to also look at things like the environmental impact, the social impact, as well as the impact on communities. And so the notion of local jobs, a local supply chain that might add more resiliency and reliability, reduce handovers, reduce connections, that could add resiliency. But for another business, it might be about technology enablement. There's no question that managing the labor mismatch and the operational delivery is one big issue, but it's also about integrating technology and the very powerful AI we have available to make better real-time decisions in your supply chain that could transform it. It's just important to remember to link other information to the criteria in addition to supply and costs. It has to also include things like waste, environmental impact, and the other impacts that your supply chain can have. It's no question, Francine, more difficult than it was before the pandemic.
Yeah, it is. It is more difficult. Longer term, it's better. Maybe increase costs in the short term. Vivian, thanks so much. Vivian Hunt, there, senior partner at McKinsey & Co, joining us this morning on this very important topic. Now, coming up, we go back to geopolitics. Don't miss our conversation with the Germany Green MEP Reinhard Bütikofer. We'll talk Russia, Ukraine, gas, and of course sanctions against the Russian president. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Adrian Mitchell is reshaping Macy's mix of brick and mortar and digital commerce.
We have to let go of the traditional legacy department store habits and evolve with the customer.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Stocks gaining, U.S. futures gaining, economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Roma, Italy. But Danny, we have a hot headline. NASDAQ futures actually gaining some 2%. All eyes on the Fed, and this is the time we're expecting them to talk about tightening this year.
Exactly. It almost feels like stocks at this moment are disconnected from the events of today, i.e. the Fed, because we, of course, don't know what they're going to say. We expect them to signal a hike in March, but we don't know much beyond that how hawkish they will be. So often this is the time that you don't want to place any big bets. Now, we are somewhat below that 2%, 1.97%, so not too far below. But all of the action is in equity markets. You're seeing European, U.S. stock futures all do very strongly, but other risk assets like oil, this isn't even up 1%. Bonds not doing anything either. Yields are slightly higher, but less than 1%. So again, all the action is taking place in stocks. Is this about the Fed? Well, we have seen a lot of positioning flushed out. We have seen some underweighting, so perhaps this is a chance with earnings season underway to buy equities, Francine.
Yeah, an exceptional important day because of FOMC after the volatile week that we've had. Danny, as always, great work. Danny Berger there in London with some great charts that were some great assets looking at. Well, I can't find my words because I'm not caffeinated enough, Danny. Great charts that we need to look at. Let's focus now also on UK politics. Boris Johnson will face more questions in Parliament today about alleged parties at Downing Street, of course, held during lockdown, as police are now investigating the potential breaches. Now, let's get more on UK politics with our Lizzie Burden. First of all, Lizzie, good morning. So Boris Johnson's future really hangs in the balance. But are we expecting the Sue Gray report to come out before the Metropolitan Police is investigating? And actually, if the Prime Minister broke the law, he can't survive this, can he?
Well, that is the question. So now he has these two concurrent investigations. You've got the Metropolitan Police criminal investigation and this inquiry by Sue Gray. And that could be published before the police report. And Boris Johnson has said that he'll make a statement to the House of Commons and answer questions when it comes. It doesn't look like that's going to come before Prime Minister's questions at noon because Downing Street says it didn't receive the report overnight. But it leaves 4 questions. Did he breach coronavirus rules? Did he break the law? His spokesman said he didn't. Did he mislead Parliament? And that's usually a resigning matter. And if he doesn't resign, can he get away with it? But the question then is, will 54 of his Conservative MPs write to the chairman of the 1922 committee of Tory backbenchers calling for him to resign? Bear in mind, while all of this is going on, you've got a cost of living crisis mounting and tensions flaring in Ukraine. So the paralysis this political crisis is causing is now what's frustrating some Conservative MPs.
Yeah, I'm also trying to get the bottom of how many exactly parties were there, alleged parties were there? I can't remember. I think I've counted 8. There might be more. Lizzie Burden there with the very latest on Partygate in the UK to see whether the Prime Minister can actually survive. Now let's get back to geopolitics. Everything, of course, in the markets depends on FOMC, but also on what happens in Ukraine. Germany has pushed for an energy exemption if there's a move to block Russian banks from clearing US dollar transactions. Now that's according to documents seen by Bloomberg. The US has spoken to major gas producers, including Qatar, about getting more shipments sent to Europe in case of a potential Russian invasion of Ukraine that would interrupt flows. Now let's get more on the situation. Still with us, Bloomberg European correspondent Maria Tadeo. Also joining us now, German Greens MEP, he's Reinhard Bütikofer. Mr. Bütikofer and Maria as well, thank you both for joining us. Mr. Bütikofer, what exactly is the right way, first of all, for Germany's and European allies to deal with Russia? I understand a lot is at stake because of energy, but is this also the time to show Vladimir Putin what the limit is?
Thank you for having me. And clearly, this is the time for all European allies and for transatlantic allies to clearly draw together and to provide a united front vis-a-vis Russia. Obviously, President Putin is playing a very dangerous, high-risk game, and in order to deter him from following through with the threats that have been emanating from Moscow day by day, we need to make clear to him, and we need all hands on board, all capitals on board, that this would come with very high risk, economic risk in particular, for the Russian Federation.
So, Mr. Bütikofer, do you believe that the German government is playing a dangerous game, that they're not being hard enough, actually, on Russia because of the linkage with, with energy? Should they just get along with the U.S. and say, we will stop at nothing to deter Russia, including freezing Russia out of the SWIFT international payment system?
There have been discussions in the German public by political leaders, both from the government side and from the opposition. And some of the voices that I've heard, I didn't cherish that much. I don't think it makes a lot of sense to invest now into excluding possible measures from consideration. We need to be willing to pay a price ourselves also. Clearly, if we would restrict possible sanctions to those that might possibly not have an impact on our own side too. I'm afraid that would not effectively have a deterring nature. So, on the other hand, what I see is that the government is coming together. The chancellor recently, in his usually cautious remarks, has made it clear that he is willing and that the government is willing to go all in if necessary.
But Mr. Bütikofer, you say the German government is ready to go all in, but the reality is after Crimea, there were no sanctions on Nord Stream 1. You built the Nord Stream 2. It wasn't your government, but it's Germany. And right now, if you cancel the project and you continue to go for sanctions, it's the German taxpayer that's going to pay for this. So do you understand why a lot of your allies feel that Germany is actually not serious about this?
Look, I'm not sure whether it makes a lot of sense to renegotiate Nord Stream 1 or to renegotiate the situation of 2014. Still, I would maintain that without the leadership of Chancellor Merkel, there wouldn't have been this European unity. I well recall traveling to Washington at the time, and all my American friends told me Germany is going to block the sanctions, and in effect, Germany was the leader and kept the unity together ever since. So I think you should give Germany its due. And in the present situation, which is much more dangerous than anything we've seen over the last decades, I'm sure that Germany knows where we stand. We are part of the alliance.
But Mr. Bütikofer, you also know that the flip side is that a lot of people would also tell you in DC too that the situation that we're seeing as a result of the CDU policy and the appeasement of Vladimir Putin, and now all of this is coming under boiling point. So I wonder, in this government in particular, who is in charge? Is it Annalena Baerbock or is it the Chancellery under Olaf Scholz, who in some ways does seem to resemble a lot the CDU policy?
Well, it may be a journalistic interest to look for divisions in the government. It's a political interest to not have divisions. And if you clearly analyze, if you carefully analyze what the Chancellor has said and what the Foreign Minister has said, you will see that they are on the same boat.
All right, Mr. Bütikofer, thank you so much. I don't definitely think it's, that journalists want divisions. We just highlight them if certain divisions were to arise. Germany's Green MEP there, Reinhard Bütikofer, and of course we'll have plenty more on Ukraine throughout the day. Now, coming up, we're live here in Rome, once again, fully caffeinated, fully hydrated, because we have a busy, busy day. There's the presidential election going on. We understand that there's still no consensus cabinet coming up. There will be another vote today. Draghi remains the favorite, no consensus candidate, but then we also look at the relationship between Italy and, of course, Vladimir Putin. This is Bloomberg.
What would you like to achieve next in Saudi Arabia? As you know, Barrick has invested in Saudi Arabia already in a partnership with Ma'aden, the state mining company. And we have an investment in the Jabal Sayed copper mine, one of the lowest cost, highest grade mines around, actually. And we have a real commitment to grow our footprint in Saudi Arabia with a particular focus on the Arabian Shield in partnership with Ma'aden. And so after tomorrow, I'm on the way to the mine. So not only how to be at the conference, but more importantly, to go and work with our team out at the mine who've really done a great job managing the COVID crisis over the last 2 years.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. The focus here, of course, is on the presidential election, whether Mario Draghi stays as prime minister or not. So far, Italian lawmakers have failed in another round of voting to elect a president. The other question, of course, is what happens between Russia and Italy. There was this very controversial virtual meeting expected between Vladimir Putin and a number of chief executives of Italian companies. The government intervening, saying, guys, please don't meet with Vladimir Putin. So let's get straight to the man of the hour who's been working nonstop to try and cover the election and also figure out what's happening with this Russian call. He's Alessandro Speciale, and he's our Rome bureau chief. Alessandro, I mean, a number of things, of course, going on here. And the focus is really on this video call between Vladimir Putin and, Italian chief executives. The Italian government said, guys, this is not a good idea right now. Is it really going ahead?
Yeah, it is going ahead. It had been organized for a long time, and Russia and Italy have strong economic ties, of course. But the Italian government told any SNAM state-owned companies not to participate. One state company that will go ahead is Enel. The CEO, Starace, will be there. The CEO of Unicredit, Andrea Orcel, will be there. And, well, we'll try to figure out what they're actually saying and what Putin will tell them.
Yeah, and this really goes at the heart of the problem, which is if you have a lot of energy ties or, commercial ties, it's very difficult to then take, a stance on geopolitics. Talk to me about the presidential election here. So we still don't have a candidate. Is Mario Draghi still the front runner?
Slightly less than yesterday, I would say. I mean, there have been reports in the Italian media that Draghi started meeting with parties on Monday because, of course, if he becomes president, there is a void at the government. Who's going to lead the government? Are you going to have a full reshuffle, a new government, new ministers? And the fact that Draghi started talking to parties led to the impression that he was talking about this, and this was perceived as a bit strange. So for now, the situation is a bit stalled. There is a lot of talk about the head of the Senate, Maria Elisabetta Casellati, but we'll see. Tomorrow will still be a non-event. Today will still be a non-event, white ballots, empty ballots, but tomorrow, lower threshold, just 50% of the votes, and that's when something might start to happen.
I mean, I love this. So there's so much haggling right in the background. This is like a souk where people say, okay, I give you this, you get the presidency. There's like some of the conversations must be really intense in the corridors.
You don't want to know how these things are made, you know?
Like sausage. I mean, I do want to know, actually. I don't have anyone to tell me, but I'm here to find out. Our Rome bureau chief there, Alessandro Speciale. Now, it is a big day for markets. We, of course, look at FOMC also coming up, more on the NASDAQ and all of the market moves. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kaylee Lyons in New York. Our Anna Edwards is in London. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I know the narrative is really gloom and doom right now, but we got to step back.
From the Fed's perspective, I think the Fed is behind the curve.
They want to engineer a soft landing. No central bank will want to engineer a hard landing.
What we're seeing is a pretty good opportunity, we think, to get more aggressive and play the economy for now.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, January 26. Our top stories today. Waiting for the Fed, policymakers are expected to signal today that they'll start raising interest rates in March. Microsoft bounces back, shares rebound on the outlook for cloud growth. Tesla is the next big technology company to report. And President Biden raises the stakes. He warns that Vladimir Putin could be personally sanctioned if Russia attacks Ukraine. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, quite a decent bounce in equities here in Europe for a Fed day. But of course, there's a backstory to that.
Yeah, it's been a really, really volatile couple days of trading for equity markets globally, Anna. And I would say while you're seeing the bounce back in Europe and in U.S. equity futures, it wasn't really fully there in Asia overnight. It really was a mixed session when it came to Asia-Pacific equities. You did have the MSCI Asia-Pacific Index down by about 0.1%. Japan was a really big laggard, but you saw some outperformance coming out of China. The CSI 300 actually ending the day about 0.7% higher as Chinese state media are telling investors to really hold their own here, even in the face of all the market turmoil we've seen. Those state media outlets really talking about easier policy in China, trying to shore up the equity market that came very close to a bear market in the Tuesday session. And speaking of Chinese assets, I did want to point to the Chinese yuan, stronger against the dollar for a sixth day in a row. Right now it's 632.49, stronger by about 0.1%, at its strongest going all the way back to April of 2018. And then finally in the bond market, you are seeing some selling pressure, Matt, including in New Zealand, where the 10-year yield moved higher by more than 4 basis points ahead of some government auctions tomorrow, Matt.
All right, so we'll be paying close attention to really three main threads today, Kaylee. You've got to watch what's going on in tech. After Microsoft earnings yesterday, it looked like initially disappointed the market. Now they're up in the pre-market. We're going to hear more about that from Danny Berger in just a moment. And of course, as Anna said, Tesla is coming out later. Massive, massive stocks, and they have the ability to move markets. Then you've got the Fed decision. I'm looking at the 2-year because the front end of the curve is obviously moving more than you see in 3s, 5s, 10s, etc. And right now, we're back up above 1% here. How hawkish is the Fed? Are they perhaps, as Tom McKenzie asked earlier, a little bit more dovish than maybe the market expected, and that's why we have a bit of a lift? And then the geopolitical tensions are driving energy prices higher. I've got Brent here because it's the global benchmark, up to $89 a barrel. Of course, NYMEX is up as well, and natural gas is up strong today. So we'll be watching those three threads: tech, the Fed, and the geopolitical issues. Bitcoin, by the way, up 2.8%. It's really been a risk sentiment sign lately, and it looks like risk on. Anna?
Yeah, absolutely. It does look risk on, and that's certainly how things look here in Europe. Those three threads that you mentioned, Matt, certainly having an impact on European markets. And usually on Fed Day, we wait and watch and keep powder dry, essentially. But today looks a little bit different. A rebound from some of the volatility that we've seen of late and some of the selling we've seen of late. Some of these markets in Europe up by more than 2%. What is driving us there? Travel and leisure is one of the stocks in focus, the sectors in focus, sorry, up by more than 4%. Some of the stocks in that sector up by 6, 7, 8% this morning. We spoke to Wizz Air, one low-cost airline in Europe earlier on. They were speaking quite bullishly about the prospects for just how normal the summer could be, which would be a treat for everybody. Let's talk about something else that's been normalizing just a little bit, and that's been natural gas prices. Not normal at all, but heading downwards at least. So we're down 2% on this is the benchmark European natural gas price. Remember, we peaked at around 180 euros per megawatt hour. That was back in December, so we're considerably weaker than that. We've got more gas flowing through that pipeline today than at any time since December. More orders coming through. That is the pipeline through Ukraine. The pound, 135 right now. I put this in just to illustrate how we're not really seeing much impact from all of the political turmoil as the future of the Prime Minister of the United Kingdom hangs in the balance. Many people saying, look, that's not going to stick to equity markets or indeed to FX markets, and others saying, well, where is the political risk? Is it if he stays or if he goes? I put in Todd's on the corporate reporting side of things as well. This is a luxury shoe manufacturer, amongst other things, and they reported earnings. Another signal, Kaylee, that we're seeing positivity for the luxury sector through the earnings story.
Yeah, earnings, of course, one thing we're having to pay attention to throughout the week and today, Anna. But of course, the day has only just begun. There is still a lot more on deck, including voting continuing in Italy to elect a president. It's set to resume today after a secret ballot yesterday failed to agree on a winner for the second day in a row. So we'll pay attention to potentially the fate of Mario Draghi. Then big tech earnings will continue after the bell today. Tesla will be reporting. And of course, the big event of the day is the rate decision we're all watching from the Federal Reserve. It is expected to signal its first interest rate hike since 2018. And let's get more on that decision now with Michael McKee, Bloomberg Chief Economics and Policy Correspondent. Mike, give us the rundown.
Well, good morning, Kaylee. It is Fed Day, so party responsibly. I'm not sure, given what you guys are talking about in terms of watching the markets for a Fed reaction, that we're going to get all that much, because we kind of know what they're going to do and what they're not going to do. They're not going to raise rates today. But here's inflation, the white line here, and it's at 5.7%. That's the PCE index, the Fed's favorite. Here's where they want it to be, 2%, and in kind of the range that the Fed would be in. And here's where the Fed funds rate is, at 0. So how many times does this have to go up to bring this down? That's the question. Probably not going to get a great answer today. The Fed is going to tell us that they're going to be flexible. We know they're going to raise rates, but they've got a lot of issues out there. On the inflation side, yeah, we've been talking about that. The highest inflation since '82. Broader pressures, not just for prices, but for wages. Supply chain questions still around. And what happens if China has to lock down even more people? That could be a big problem, push prices up. But that could also mean that we have a hit to growth. There could always be a new variant. We got Russia, Ukraine out there. What does that mean for the markets? What does that mean for the Fed? And fiscal tightening, not enough attention paid to this. We gave a lot of money to everybody in the last year. This year, we don't have that. So where does the Fed go from here? I'll see you at 2 o'clock New York time this afternoon.
Yeah, definitely watching FCON go on the Bloomberg for the fiscal tightening effects. Michael McKee there talking to us about the Fed. Be sure to stay tuned to Bloomberg. Special coverage of the Fed decision and news conference. It starts actually at 1:30 p.m. New York time, 6:30 in London. Now let's look at how markets are positioning ahead of that meeting with Bloomberg's Danny Berger. Danny?
Matt, I really like how Bill O'Donnell over at Citi puts it, that positions have been cleansed in this bond market ahead of the Fed decision. And for the first time in a while, ahead of a decision, we have balanced and neutral positionings. Now, to catch everyone up, we've been extremely short in this bond market, but that has started to normalize. You can see it in JP Morgan client positioning, that shorts have started to come off the table. You can see it in the appetite for auctions on short-dated treasuries. Now, it's not just the bond market that seems to have shifted more neutral before the decision. It's also the equity market. Deutsche Bank points out that for the first time since climbing out of the pandemic hole in November of 2020, positioning on equities is underweight. So the hope here is that without extreme positioning in equities or bonds, we'll have a somewhat logical response to the Fed, rather anything dictated by investors having to quickly flip where they stand on these markets.
That's interesting. So we go from short to cleansed in our positioning ahead of the Fed today. Also in focus, as well as the Fed, we have the tech earnings story then, Danny. We heard from Microsoft yesterday, didn't we? And that's already had a chance to be filtered into markets. We're waiting to hear from Tesla.
Yeah, really fascinating reaction on the part of Microsoft. The initial reaction was to hit that sell button really, really hard post-market, but then it eventually climbed with some reassurance from the corporates there saying that their cloud business is doing well. So Microsoft is a perfect example about how investors are really jittery around tech this earnings season. I think friend of the show, Dan Ives of Wedbush, puts it really well, saying we view this as the most important earnings season for the tech space and potentially the last decade, as the street now needs to hear good news at a white knuckle time. So at least it was good news for Microsoft yesterday. It's climbing pre-market, so is Tesla before their earnings. But considering the Fed put is much lower now, if not totally gone, it's back to basics for tech. It's all about fundamentals, and these earnings really need to crush expectations to help justify multiples, Matt.
Yeah, absolutely. We're watching very closely what happens to Tesla, and of course, still trying to figure out Microsoft with the cloud revenue coming down a little in the fiscal second quarter, but forecasts are for strong cloud revenue in fiscal third, and that's what Dan Ives says people are watching closely. Danny Berger there talking to us about the tech earnings. Let's get to the geopolitical now. President Biden has ramped up his efforts to deter Russia from war. He says he would consider personally sanctioning Vladimir Putin if the Russian leader orders an invasion of Ukraine. Meanwhile, the Kremlin says sanctions on Putin would be politically destructive for the signal they send, but wouldn't have any economic impact on him. Anne-Marie Horton joins us out of Washington, D.C. to discuss. So, Anne-Marie, what do we know?
Well, largely, Matt, this would be symbolic, right? And the U.S. rarely does level sanctions against heads of state. And the Kremlin quickly shot back, saying that that would be a breakdown on the political front. But you make a very valid point in the fact that even if this was just to be symbolic, it would be incredibly hard to sanction President Putin's assets, because people for years, journalists for years, I know some of them, have tried to find out exactly how much wealth President Putin has actually accumulated. What we know from the Kremlin, and you can look this up in public records on kremlin.ru, he makes about 10 million rubles a year, owns a few cars and an apartment. 10 million rubles a year is 130 US dollars. We obviously know the president has a lot more wealth than that, and many analysts have said he could be the richest person in the world. The Pentagon Papers have tried to show this in the past, using those people around him like oligarchs and businessmen, but to directly pinpoint that wealth and the linkage to President Putin is very difficult. So these sanctions, if they were to be levied against the president, would largely been symbolic, but definitely would be a massive show of force from the United States.
Okay, so if that is a little bit murky to figure out, Anne-Marie, let's talk about other sanctions that could be put in place and how they could affect energy in particular. We spoke with Jeff Curry of Goldman Sachs yesterday on Bloomberg Daybreak Asia. Just take a listen to what he said the potential impact could actually look like.
Our base case is no disruption. You know, it's very unlikely. If we think about the sanction imposed disruption, I like to call it mutually assured destruction. It's not in the interest of any party to stop flows of energy through Ukraine or even into Western Europe.
So he doesn't expect much disruption, Anne-Marie, and in fact, maybe there won't be, because we understand from Bloomberg reporting overnight that Germany is seeking an energy exemption if financial sanctions on Russia were to be put into place. Is that something the U.S. would agree to?
Well, the United States is struggling right now when it comes to the energy sector in Europe. They are trying their best to talk to other suppliers outside Europe. My reporting has showed they're talking to those in Qatar to try to make sure they can get liquefied natural gas to Europe to fill that hole if there was going to be a short-term disruption. Two things come to mind. One is that during the height of the Cold War, those flows, those energy flows continued. It is mutual disruption on both ends. Economically, President Vladimir Putin needs to continue those flows. But on the second point, if there was to be conflict in Ukraine, there is heightened risk that there could be disruption to flows, and not just because the Russians would want to use it as political leverage and energy as a weapon. Halima Cross have always said that President Putin never lets a good crisis go to waste. But what if there is an impact or destruction on a pipeline? That could potentially cut off some flows to Europe, and we do know that a third of that gas right now, especially as we are waiting, or the Kremlin is waiting for Nord Stream 2 to get a check mark, a third flow through Ukraine.
Okay, Anne-Marie, thanks very much. We'll wait to see how far Germany is prepared to go then on the sanctions story. Anne-Marie Hordern with the latest on that geopolitical story. Now, voting to elect a new president in Italy resumes today. That's after a secret ballot yesterday failed to agree on a winner for the second day in a row. Meanwhile, the Italian government has asked a group of top business leaders not to meet with Russian President Vladimir Putin. Earlier, we heard from Paolo Scaroni, the vice president of Rothschild Investment Bank.
Our houses, our hospitals, our electricity depends from the Russian gas a lot. Now, we have to understand that if you are not independent in terms of energy, you are not politically independent. This is what's happening in Europe.
Let's get the latest from Bloomberg's Francine Lacroix, who joins us now from the beautiful rooftops of Rome. Francine, so we follow the presidential race in Italy and also the relationships between Italy and Russia. Tell us the latest.
Yes, Anna, there's two big stories. Of course, the presidential election, and this, what's at stake is basically the stability that so far Italy has enjoyed in the last 11 months whilst Prime Minister Draghi was in charge, because he could become president, and it's quite murky. The process, I have to say, is not only murky, but extremely complicated and secretive. So for the moment, we don't have a name, and we'll have to see what happens. The other story, which is really the talk of the town, is Russian gas, and the fact that the president, Vladimir Putin, is meeting virtually with about 10 to 15 Italian chief executives. This was planned in November, but it's going ahead in a couple of minutes. I think it should have started a couple of minutes ago. The Italian government is not happy about this, so it actually pulled out chief executives that are state-owned companies because they say it sends the wrong message. But it really goes to the trouble of basically how do you, not hurt your economy, so have that Russian gas, or even the Italians sell a lot of pasta to Russia, whilst at the same time keeping the fire on the president because of what it's doing with Ukraine. And Kaylee, should I move out of the shot so you look at how beautiful it is? Because no one's really listening to what I say. They just want to see the Campidoglio behind me.
Admittedly, Francine, that's what I'm looking at, but we do so appreciate your insight and for joining us from that beautiful Rome, Bloomberg's Francine Lacroix. And now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. One mover to the upside is DraftKings. Got upgraded to overweight at Morgan Stanley, $31 price target. That stock is trading around $20.60 this morning, up about 6.6% before the bell. I'm sure a lot of sports bettors are gearing up for the NFL Conference Championships this weekend. Another mover to the upside, Texas Instruments. It reported after the bell yesterday, gave a really upbeat revenue forecast for the current period thanks to strong demand. That stock is up about 4.3%. Sinking to the downside, though, F5, the software company, it gave a weaker revenue forecast, also cut its growth outlook for the year, and as a result, that stock is down about 14% before the bell, Anna.
Yeah, supply chain issues in focus there. Coming up on this program, more on the markets with Peter Chatwell, Mizuho International Head of Multi-Asset Strategy. How does positioning look ahead of the Fed? Is he pretty neutral? What kind of response to the Fed is he expecting to see? And on that Fed decision, Raffaella Tenconi, ADA Economics Chief Economist, joins us. Plus, stay with Bloomberg for special coverage of the Fed's decision.
Hello, traders. How are you doing today? As you can see, we closed our position that we opened yesterday, right here, and today we close it at 112.82. So all of you guys who copied our trade yesterday, we made £1,000. Well done, guys. And let's move on. Let's see what other opportunity will give us today, this day. And good trade. For other people who want to get the strategy, please go to company.co.uk. You can purchase a strategy from our website. Also, you can get a webinar or one-on-one. Talk to me. You can speak. I will try to answer a question. It will be one-on-one conversation. 15 minutes. I will spare my time. If you have any questions, please register on our website as well. Okay, guys. Stay safe.
Because it'll be both, not only demand, based on the demand we are seeing for our vehicles, and the rest of the industry is seeing, it feels like the demand is certainly there. But the question will be how quickly can we, all of us, execute to build capacity to meet that demand. And that's what we are very busy doing. Within the next 24 months, we expect to get to about 600,000 battery electric units globally. And that's before our bigger investments that we're making in Kentucky and Tennessee, both for batteries as well as assembly, come online, because they don't come online until about 2025.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Fed will make its call.
Beware the rate hikes of March.
You need top experts to break it down fast.
There is no muscle memory for this kind of economy.
The Fed's history is they break something when they raise rates too much.
Trust Bloomberg for the fastest coverage and exclusive analysis.
We are now setting ourselves up for recession.
This disproportionately affects your lower income households.
It's not going to be an easy one.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kayleigh Lyons, Anna Edwards with us in London. We are watching a number of issues, but credit spreads, especially as we head into the Fed decision today. And a lot of onlookers have pointed out that they remain very tight. Not easy to say there's a lot of systemic risk in this market, even as the Fed prepares to take away some stimulus. Now, I want to talk to Donna El-Baltaji about this. She's Bloomberg's managing editor for credit in EMEA. And it's interesting because on the other hand, Donna, the last time we talked to you, we pointed out that corporate bonds have had their worst start to a year in decades. So what do we see in terms of the rates market here?
Well, basically what we're seeing is that this market seems to be an oasis of calm, where you've got other markets that are much more volatile. These company bonds are basically saying that whatever is happening right now has already been priced in. Yeah, there was a slight move, but quite frankly, this has all been talked about at the end of last year. Everybody knew that company earnings were going to be in trouble. Everybody knew that central banks were going to talk about interest rate hikes, and everybody knew that inflation was going to hurt. So this really isn't new. And yeah,
but the lack of reaction that we're seeing there, Dana, good morning, both in Matt's chart in the United States and in your beat in the European region, the lack of reaction we're seeing in credit spreads, is there a risk that maybe credit markets are too relaxed about the tightening to come?
Well, we did see an impact in the primary markets. What we saw yesterday, for instance, was that there were only four borrowers that came with mandates. And what that showed was that people were a little bit more afraid of how the primary market would react. Having said that, the pricing hasn't really moved. And that really what shows you whether or not people are, in fact, worried about this.
Okay, Dana, thanks very much. Thanks for the insights. Dana El-Abasaji talking to us about credit markets here in Europe and beyond. And for more market analysis, check out MLIV Go. That is the blog from the Markets Live team on your terminal. This is Bloomberg.
Did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the Yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg Surveillance Early Edition. We are watching the markets on this Fed decision day, and the markets are marching higher at the moment. The Stoxx 600 in Europe has now extended its gains to 2%, set for the biggest jump in 7 weeks. You're also seeing futures in positive territory to the tune of almost 2% on NASDAQ 100 futures, Matt. The question is, can these gains hold given the volatility we have seen in the past few sessions, and especially ahead of that Fed decision at 2 p.m. Eastern?
Yeah, I think a lot of it has to do with how markets react to Microsoft earnings. Yesterday, They were a little bit all over the shop, as you would say, in England, down 5% at one point. Now they're up in the pre-market as we really watch, or as investors watch, the cloud revenue very closely. But don't forget, it's such a huge company, more than $2 trillion. Plus, we have Tesla today. So there's a lot to do with tech. It's not all about the Fed, although they're obviously incredibly closely related, and also a lot to do with geopolitical and energy prices.
A lot to do with tech, and perhaps Europe doesn't tell that story entirely, but we are stronger in Europe, which is quite unusual for a Fed day. We'll talk about the Fed day. Unusual to see such huge moves, but the context is important. 7% down on global stocks, of course, year to date. We'll talk to Peter Chatwell next. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year. We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. So recap the headlines.
You do not want to miss this
How
story.
How are you thinking about those dynamics?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And here is what you need to know. Policymakers at the Federal Reserve are set to signal plans for their first interest rate increase since 2018. That rate hike isn't expected until March. They'll also discuss shrinking the Fed's balance sheet in the midst of the highest inflation in almost 40 years. Wall Street strategists say it's time to buy. Banks from Goldman Sachs to Citigroup see the global stock sell-off as an opportunity. The S&P 500 is down more than 9% since hitting a record high on January 3rd. And shares of Microsoft are higher after investors were encouraged by its forecast for cloud growth. Tesla is the next big tech company to report. CEO Elon Musk promises to give an updated product roadmap on today's earnings call after the bell. That is a look at what you need to know this morning. Matt, I know you'll be focused on the Tesla story. What else has caught your eye ahead of the U.S. session?
Yeah, I'll be focused on really the whole tech sector because that's what's been driving the volatility that we've seen over the past few days. The historic volatility. Right now, we're looking at S&P futures that are up more than 1%. And as Kaylee was pointing out earlier, that's led by NASDAQ futures up about 2%. The U.S. 10-year yield up a little bit as investors let go of some of that debt. You know, as the Fed signals it's going to raise rates, maybe you don't want to be holding the stuff with lower coupons. New York crude is up with Brent right now 0.6%, 86.15 a barrel for NYMEX, $89 a barrel for Brent, the global benchmark. And Bitcoin, which has really been positively correlated with tech stocks. I think 0.7 has been the positive correlation, which is extremely strong with the NASDAQ 100. Right now, it's up 3.33%, $37,803. Kaylee, what are you looking at in the pre-market?
Well, I am watching tech just like you, Matt. You do have a number of movers, a lot of them earnings related, including Texas Instruments, of course, operates in the chip space. It gave a really bullish revenue outlook forecast for the current quarter, thanks to the strong demand it is seeing. So that stock is up about 4% before the bell. Microsoft is also higher, and this was a really interesting story. Initially, even though it beat expectations in its earnings report, it fell hard after right after the results. But on the conference call, when they talked about a better growth outlook for that key cloud business, you saw the shares rebounding, and they are holding that gain right now up the better part of 4% in early hours. And of course, as Anna was speaking about and you were speaking about, Matt, we do have Tesla coming up after the bell today. Ahead of that print, the stock is up about 4% in pre-market trading, and Apple will report tomorrow, but it is taking part in that broader big tech rebound we are seeing take shape this morning. Right now, up 2.2% before the bell. We'll have to see if these gains can hold throughout the actual cash trading session, Anna.
Yeah, absolutely. A lot of focus on technology stateside. Focus on technology here in Europe. That Microsoft report filtering through to some of the tech names here in Europe. Europe has, well, the US has, of course, the tech slant. Europe has some tech names, but also has luxury. That's why I've got Todd's in here, up by 12.3%. It's a small luxury player, but continuing that theme of strong luxury goods companies' earnings through the reporting session. We just did that headline across the Bloomberg that we've seen the Stocks Europe 600 extending gains to 2%, the biggest jump in some 7 weeks. So that's the sense of risk on we have coming through on the European equity market space. And travel and leisure is certainly at the forefront of that. Some of the names in this sector up by more than 7% in today's session. Some positivity around what could be achieved in the summer on the travel and leisure side. Also adding to that risk on sense, we have a little bit of a retreat in some of the pickup we've seen recently in gas prices. This is the European gas benchmark, just dropping a little as we see some of that gas flowing, some of the orders being increased for gas flowing through that Ukrainian pipeline. The pound pretty unmoved by all the political tension recently that we have seen. And there has been plenty of political tension, many news headlines on that front, Matt, but not sticking to GBP right now, Matt.
All right, now let's get over to Peter Chatwell, Mizuho's head of multi-asset strategy, for a breakdown of what we can expect. Peter, walk us through the tick-tock of what you think we're going to hear today from the Fed, when we're going to start getting rate increases, what you think we'll see for this year, and what fiscal tightening is going to look like.
Well, I think what we're going to hear is pretty much no change from recent rhetoric. If you look at financial conditions, you know, with the equity move and the slight widening in credit markets, it's nowhere near sufficient enough to really register on the Fed's monitor. So really what we're looking at is the Fed still being extremely concerned with inflation, the risk that inflation can de-anchor, and also the risk that inflation prints may get worsened if there are sanctions levied on Russia. So really it's about this conflict, potential conflict, which actually could make the inflation picture worse for the Fed. Therefore, they need to be talking about a rise of at least 25 at the March meeting. Potentially,
Peter,
yes.
I heard at least 25 there. Do you think there's a real chance they move 50?
Actually moving, very, very low probability, but keeping the door open to it in case there is, you know, a big change on in energy prices, for example. I think that's what they're going to be doing. Preserving optionality is going to be key for the Fed here.
Well, and of course, Peter, the market pricing of the Federal Reserve's policy moves going forward already has come quite far. Is it even possible for the Fed to deliver a hawkish surprise today?
Well, I think so. I think there is still room with regards both on the rate side. You know, opening the door to a 50 at March, opening the door to more frequent hikes going forward if needed. And that's what it's all about. If needed, it's about the tail risk that energy prices rally from here, caused by geopolitics, caused by whatever factors. And that's what they need to be cognizant of. And this is the sort of Fed you're going to hear all of this quarter, because inflation prints are still going to be above 5%. Even as they come a bit lower, still the Fed needs to be controlling expectations, but also the balance sheet reduction. Really, does the Fed need to be buying bonds at the moment? Don't think so. Do they need to be allowing the roll-off? Yes, I would think so, to try and rein things in. So there's room for a hawkish surprise on that front as well.
Okay, so it's about optionality, and you say there is still room for a hawkish surprise. What about the tightening of financial conditions, even if it's only marginal, that we've already seen? Part of that, of course, coming through in that lower stocks environment, Peter. Is that going to be something that gives the Fed pause for concern or an excuse for not being quite so hawkish as you suggest they could be?
Yeah, there's certain times when the Fed would be very sensitive to financial conditions. This isn't one of them, because 7% inflation and an economy which is still performing well, and inflation risks are still probably, in their minds, skewed to the upside. So this moderate degree of financial conditions tightening is probably welcome. And if anything, given that it's happening all from expectations, it may even suit them to continue this tightening of rate expectations and balance sheet expectations to allow this tightening of financial conditions to continue a bit further.
When we think about where rates are, and we think about the way that rates volatility sparked equity market volatility, Peter, and we're waiting for the Fed then, we're waiting to hear what the Fed has to say today. What do you expect to see in tech stocks as a result of what the Fed says? Because, of course, we've got the earnings season underway, but we're also really waiting to see the Fed's announcement. What is your expectation for tech from here?
Well, there's two things to consider. Is there money on the sidelines ready to be put to work? Yes, there probably is. So there is room for potentially all asset classes to have a rally after the Fed, even if they come out hawkish. That's the one thing. But I don't think it would be sustained. And the reason that it's very unlikely for it to be sustained is simply real rates are going up. And we're still in a negative real rate environment, but the change in those real rates is super important, and that's going to change the mentality for the market here. And also just think, if the average investor thinks that equities now no longer have significant upside to them, then what matters is the income side of the investment argument, and that's where tech is still at risk of enduring further correction, or at least further underperformance here.
Peter, you run multi-asset strategy at Mitsuo. When you talk with clients, what are they looking for? I mean, is it starting to get to a point where they've made so much money in the last 3 years that they're concerned right now with preservation of capital, or are they still expecting to be able to grow their piles?
The ones I speak to are still looking for upside to be able to grow. The defensive mindset hasn't really caught on yet, so that's where there is also further potential for that more defensive mindset to become more entrenched. We expect that is going to be enforced upon some investors once monetary conditions have actually tightened, really tightened, once hikes have been delivered, once the balance sheet is reducing. So at the moment, it's just about anticipating that those expectations of strong returns becomes a bit more moderate, and then the investment strategies employed starts to become a bit more defensive. And we can see that going through. You can monitor that in various ways, like with ETF flows. You can see that defensive positioning is becoming really prevalent, but it's only at the start of this change.
Okay, so we'll look for more of that. Yeah, interesting that we haven't reached the peak in that defensive mindset then, with the Nasdaq down 13.5% year to date. Peter, thank you so much for joining us. Peter Chatwell, Mizuho, head of multi-asset strategy. Coming up, we stick with our Fed conversation. Raffaella Tenconi, ADA Economics chief economist, joins us. What is the expectation at ADA around the Fed? We'll get to that conversation next. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Employment is still well below the pre-pandemic trend, but everything else about the labor market says it's very tight. So it appears that the economy has less capacity than we thought. And so that's why we're in a situation where inflation, has not faded away quickly.
That was the Nobel laureate and economics professor Paul Krugman speaking with Bloomberg this week. Raffaella Tenconi, ADA Economics founder and chief economist, joins us now. Raffaella, good morning to you. So we're heading towards the Fed meeting. I spoke to one guest from Bank of America earlier on who said it's hard to know what hawkish and dovish messages from the Fed will look like this year. It's getting so complicated with interest rates in the mix and the runoff of the balance sheet. How do you think the tone of the Fed will develop through this year? Do you think they start hawkish and carry on in that vein, or become more hawkish as the year progresses? What's your expectation?
Good morning to you. I think it's a more of a binary situation. Either they have decided that they will play prudent, in which case they will give more or less what the market expects, a signal that in March they will raise rates, continuation of a communication that the mixture of the balance sheet tapering and the interest rates in any case will take care of the recovery. So it's a fine-tuning of inflation more than a very serious message that inflation is now the priority. And if it is a hawkish Fed, I think you're looking at significant balance sheet consolidation, so an actual reduction of the Fed balance sheet, and anywhere between 5 and 6 rate hikes by next spring. So essentially conveying the message that if inflation is the priority, recession is what you're looking at next year.
What kind of picture do you see in the European economy? I mean, how much does it differ in terms of the threat of inflation and central bank policy?
European business cycle is slightly behind the US one. The data that we have for January is very strong. I think you now see that the Green Deal and the digitalization package from the European Commission is really dominating and driving the recovery in construction and industrial policy right now. So I would say that for European standard, the recovery is very robust, although you can also see that consumers are very anxious about inflation. Inflation is going up, so that is similar to the US. However, I think the ECB is making its strategy very clear. It wants to wait and see. Inflation is not yet a priority, so you could let the Fed take charge, see how far they go in slowing down global growth.
Yeah.
And the ECB has ample time by the summer to start signaling its adjustment.
Well, Raffaella, on that point of the Fed's ability to slow down growth, you talked about a potential recession next year. Do you think this Federal Reserve is going to be willing to hike into weakness?
Yes, because that's what central banks tend to do all the time. It's just the business cycle has become so long that we tend to forget how it feels and how eventually it unfolds. If you look at the labor market is not yet back at pre-COVID level, but it's very strong. I think you will see the best of the labor market within a few months. And then you'll begin to see the number of unemployed creeping up, but it's a very slow process. So from the central bank's perspective, you will still be able to say that overall the labor market is improving and inflation is really pressing. So central bank has to work within a fairly clear mandate. And if the mandate is inflation
Uh-oh.
Looks like we're having a little bit of trouble with Rafaela's shot there, but I think this is definitely a very interesting conversation, Anna, especially on the points about Europe as we continue to watch geopolitics as well.
Yeah, interesting call on the recession and the timing of that in the United States. Thanks to Rafaela Tenconi, if she can still hear us from ABA Economics. Apologies for the breakup of that line. But interesting to get her thoughts on that, recession forecast in the United States and the extent to which the Eurozone can afford to let the Fed take the lead here on tightening. With that in mind, remember to stay with Bloomberg for special coverage of the Fed decision and news conference. That starts at 1:30 p.m. in New York, 6:30 p.m. in London. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Adrian Mitchell is reshaping Macy's mix of brick and mortar and digital commerce.
We have to let go of the traditional legacy department store habits and evolve with the customer.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kayleigh Lyons in New York and Anna Edwards in London. Tom Keene joins us right now, co-anchor of Bloomberg Surveillance with the preview. You got a long day ahead of you, Tom.
Well, it's a long day, but it's going to be very exciting. And I might point out, Matt, it's going to be an historic day. There's all sorts of thinking here. Wonderful publishing this morning. We'll feature Stephen Major of HSBC out of Hong Kong with a really terse research note. Bill Dudley's scheduled to join us, and that'll be interesting because he says, let's go, let's go, let's get going. So what's the backdrop here? Matt, here's one of my most famous charts. This looks good on radio as well. And that is the Bank of Japan, where they had to say oops years ago. Now in the middle of the chart is the financial crisis. That was a little bit everybody in the pool together. But the aloneness of the Bank of Japan is they disinflated off the boom of the 80s and the over-leveraging, and they had a policy prescription to raise rates, and then they had to back down, as you can see with the red circle. and down we go to the long-term disinflation and deflation of Bank of Japan. And that's the remorse, that's the angst that's out there that confronts any central bank leader that goes, let's go, let's raise rates.
Tom, what do you think, as we talk about one central bank leader, Jerome Powell, when he takes the podium for the press conference later, what is the toughest question he could face?
Toughest question, well, it's going to be from Mike. Mike has no last name at Bloomberg. Michelle Smith, it's McKee, M-C-K-E-E. But with that said, it's what he's not going to say. It's very important that he find a theme, find a line, find a plot, and stick to it. And within some of these questions, not all of them, I'll be honest, some of the questions are really weak. But within the tough questions he's going to get from people like Michael McKee, he's going to have to really dance carefully. I would predict you're going to read, and Tom Purcell mentioned this morning, you're going to see him reading off all sorts of cards this time around.
Okay, so you think the messaging, will be quite careful. Yeah, you mentioned the BOJ mistake. Makes me think here in Europe about other European central bank leaders that have come before, and maybe where mistakes might have been made there, and it's quickly reversed. I'm thinking of Jean-Claude Trichet in years and years gone by. You've got every asset class covered, though, Tom, when it comes to the program, the Fed special. You've got people to talk about rates, people to talk about the economy. You've got multi-strategists. Where's your focus going to be on that Fed special?
My focus on the Fed special is the linkage between balance sheet reduction or quantitative tightening, QT, and also the rate rises. Ira Jersey of Bloomberg has done some phenomenal work on this in the last 48 hours. The guests, really important. Maybe bring them back up again if you can. Brad, the idea here of Priya Misra, who said they will go slower. Diane Swank, really worried about economic growth, and Jeff Rosenberg over at BlackRock, of course, looking at it. We're down to a financial market. As Jeffrey Yu said yesterday at BNY Mellon, it's all about the real rate moving higher.
Don't forget JB. I'm going to be watching for Bianco.
Yeah, he's only on to tell us what the Rams 49ers are going to do, but other than that, it'll be great.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, previewing the program to come, and there's a special, of course, this afternoon, the Fed decides. Now look at what else we're watching. I am focused on cars. Surprise, surprise, today, every day. I spoke with GM President Mark Royce yesterday. It was glorious. He gave me a timeline for when his company could end gasoline engine production.
I think in the next 10 years, that can certainly happen. Again, we are marching to battery chemistries that solve things like heavy-duty truck durability and duty cycle, and we're doing that very rapidly. We aspire and look forward to the day when we have zero tailpipe emissions, and that's the mission we're on here right now.
Now, I will miss the 6.2-liter V8 gasoline engine, but over his left shoulder there, you saw the new Silverado EV with 765 horsepower, does 0 to 60 in less than 4.5 seconds. It will be available to buy next year. The Ford Lightning will be available to buy next year. You can also already buy the Rivian pickup truck, electric pickup truck this year. So many products in terms of electric pickup coming to market before Tesla's Cybertruck. Yeah. Tesla earnings coming out after the bell. Everyone's going to be watching to see, when is the Cybertruck going to come out? Are they going to be able to make it at all? Was it just a joke? Or is it a real thing? And they're going to be watching to see, Dan Ives points out, the production numbers. Can Tesla make and sell more than, I think, 1.38 million cars next year is the target? That is impressive. There were a lot of people years ago who would have said that will never happen, more than a million cars, and now they're up there playing with the big dogs.
I gotta admit, Matt, I know you get so excited about cars, but it kind of goes in one ear and out the other for me because I live in New York City and I don't even drive a car. I, however, will be watching, not cars today, but the Federal Reserve decision at 2 p.m. What I'm really focused on is, can it deliver a hawkish surprise in any sense, given how far market pricing has come, Anna? So it'll be interesting to see how that shakes out around 2 p.m. Eastern time and 2:30 when the chairman will begin his press conference.
Yeah, absolutely. The focus for markets. Yeah, I'm afraid I'm slightly with you, Kaylee, there on the on all the talk of trucks in particular. They just sound all too big for European roads. I'm focused on the UK politics. Boris Johnson will be facing Prime Minister's questions once again. Once again, we're asking questions about whether he can cling on to power, hang on to power, with all the questions circulating around what happened and didn't happen at number 10 Downing Street. The police investigating. Might we hear that civil servant's report later on today? We'll have to wait and see. More Bloomberg surveillance ahead. This is Bloomberg.
variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Real rates infect everything. As long as they're going up, risk appetite is not going to be in a good place.
I don't think the Fed should be in the business of putting a put on the stock market.
The Fed is more likely to be responsive to credit conditions than they are to the S&P 500.
I know the narrative is really gloom and doom right now, but we got to step back.
What we're seeing is a pretty good opportunity, we think, to get more aggressive and play the economy for now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Fed Decision Day from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market has a real bounce to it. The Nasdaq up 2%, the S&P up 1.4%. TK, that Fed decision a few hours away.
Is it a live meeting or a dead meeting? What I think it is a listen to every word, hang on every word meeting, John. As Tom Porcelli mentioned in his RBC Capital Markets note this morning, this is a chairman. We should look for him to be reading off of prepared comments in his answers. That's how important this meeting is.
Tom, how do you think he responds to the volatility of the last couple of days, if indeed he responds at all?
He will respond as Alan Greenspan. He's aware of it, but it's really not part of their calculus here at a March meeting. What is their calculus? What is the plan here? Do they act today? Do they get out front of the next meeting? How do they frame it? It's fascinating, John. It's going to be an important moment at 2 p.m.
Neil Dutto of Renaissance Macro, Lisa, said this: given the current pricing in markets, any indication the Fed will not be starting with a 50 basis point hike might be enough to provide a floor under risk sentiment.
Well, perhaps we're seeing that bounce today ahead of that because people are starting to price out that particular scenario. Honestly, I think I love what Vince Reinhardt of Dreyfus and Mellon said. He said, they completely abhor surprising markets. This is Fed officials. The January meeting is mostly about talking. So we might be hanging on every word, but it's talking, not necessarily taking the big action.
Can I leave you with this? The last time the Fed met, December 15th, do you remember what the Nasdaq did? The Nasdaq was up by more than 2%. Do you remember what the Nasdaq did when the minutes came out?
Yeah.
It was down more than 3%. What do you think we should take away from that as we go into this news conference?
That it's unclear whether they could actually frame the message in an accurate way with respect to their policy and what their forecasts are at a time of such uncertainty. My key question is, what economic data point are they watching? And then that will be what the markets are watching and responding to in the weeks ahead.
And many people suspect it's not the Nasdaq. Maybe it is. The Nasdaq 100 futures this morning up more than 2%. Let's whip through it. Your stock price action looks like this, up 1.43% on the S&P 500. Yields just a little bit higher on 10s. at 178.51. The dollar showing a bit of strength again. Euro dollar negative 0.2 to 112.81. And crude back through 86, Lisa, $86.16.
Yeah, still a lot of turmoil over what's happening with Russia and Ukraine. Before we get to the Fed, I think this is important. 10 a.m. we get the Bank of Canada releasing its policy rate decision. There actually is a significant chance getting priced into the market that they are going to raise their policy rate by 25 basis points. You can see that the two-year yield over in Canada has risen to about the highest levels going back to March of 2020 or a little bit after that. The interesting thing to me is that when we talk about inflation, it is such a global dynamic right now. I mean, Canada is facing the fastest pace of consumer price inflation going back to 1991. And that really feeds into the 2 p.m. FOMC meeting and the call that they make there. They're going to release their policy announcement. And then we hear, of course, from Jerome Powell at 2:30 p.m. Eastern. Will he respond to the flattening yield curve? This feeling that we have 3 to 4 rate hikes getting priced into the market and an ongoing feeling that that will decelerate growth over the longer term. Does he talk about the balance sheet with respect to this? Does he give some indication of what he's looking for in terms of a response from markets and how that bleeds into the inflation outlook in the next couple of months? And then aftermarket, the tech drum roll continues with Intel and Tesla reporting earnings. Interesting to see with Intel whether they talk at all about the government actually coming in and giving them support because they want chip making to be in the United States. Interesting to see the NASDAQ down 13% so far year to date. Is this a buy? And this morning it seems like, John, the answer is yes. It's been enough and you have a lot of buy the dippers.
3 names in 3 days that make up a quarter of the NASDAQ 100. Apple tomorrow, more than 12% of the index. Microsoft yesterday, about 10% of the index. Tom Keene, Tesla, a little bit later, a little more than 4%.
I'm going to go
NASDAQ 100.
quick as I can, John, because Christopher Owen is too important. I thought the coverage of Microsoft yesterday by the financial media was lousy. We love sexy names like Apple, Netflix, blah, blah, blah. I think Bloomberg Top Live in the close did a great job of distilling a boring, big, hugely successful company. Here's what Dan Ives says. I thought it was a very important tweet this morning from the tech bull, let's call him, in a white-knuckle market with the whole street watching Microsoft's earnings with a close eye. Nadella and company gave a robust cloud guidance for the ages that will calm the street. I'll leave it there, John. But I'm sorry, Microsoft killed it in terms of calming the market.
Are you sure you want to leave it there, Tom? Are you sure? We did well, the rest of the financial media lousy.
No, I sat there in the 4 o'clock hour. I got up from the surveillance nap. I had a beverage of choice in my hand, and I watched how it unfolded. And the fact is Microsoft is perceived as boring and doesn't get the breathless love at 400 like Apple and the others. It's baloney.
Down hard on the earnings release and then up hard on the guidance. Joining us now is Chris Verone, partner and head of technical and macro strategy at Strategas, a Baird company. Chris, your line, deeply oversold names can bounce hard, but be skeptical of rallies in weak trends. Chris, what do you mean by that?
Yeah, well, I think when we just look at the price action over the last several weeks, what we've been telling clients, say the last 24 hours is, hey, turn your brain off for the next couple weeks here. We've done enough on the downside, whether you're bullish or whether you're bearish. We've done enough here in the near term to catalyze a bounce. We look for really 3 things at some of these tactical lows. Number 1, we look for stress in sentiment. We see it with put calls right now. You've had 2 consecutive days of put calls in the 95th percentile of every historical observation. Second, we look for indiscriminate selling. We did $70 billion of notional on the triple Qs on Monday, highest total ever. That's indiscriminate. And third, we look for stress in price. We saw big spikes in new lows. So those conditions, whether you're in a bull trend or a bear trend, they do conspire to get you a rally. I think seasonally we'll rally into March or April here. But what I want to be skeptical of, the names that are rallying in downtrends. There's a lot of broken tech, a lot of broken software, a lot of broken consumer that will be rallying into a downtrend here.
Chris, can you give us a sense of who's been trading? The idea of, is this institutions? Is this retail investors? Is this 3 high-frequency traders just pushing up the numbers and the volumes?
Well, the volumes have certainly been large. They have swelled meaningfully over the last week or 2. I think what's interesting on the retail side, if you look at any of the retail investor surveys, they are meaningfully more bearish than the institutional surveys. Let's think about why. Well, if the retail community were the major players in the meme stocks and ARK and Bitcoin, a lot of those things are down 50, 60, 70% from their high. So I understand why sentiment in the retail space would be significantly more depressed than what we're seeing in the institutional side.
Chris, I look at where we are, and it's simply the measurement of catharsis. For mere mortals not glued to a Bloomberg terminal, how do you measure catharsis so when you know to begin to deploy cash?
I think number one, what we see at a lot of these corrective lows is that indiscriminate attitude. That's why I was so fascinated with, the volume, the sheer dollar value of volume that we did on Monday. $120 billion in the spiders, second highest tally ever. 70 billion in the Qs, number one highest tally ever. But I also think importantly, Tom, let's acknowledge how different this correction has looked from other corrections in the quantitative easing era. Two or three things. Number one, bond yields have gone up during this correction. It's the first time in 13 years we've had a 10% correction in the S&P and bond yields have gone up, not down. And secondly, and most important for us, energy's outperformed in this correction for the first time in a decade. We have never had a correction in 10 years where energy stocks have outperformed. The character of this market is changing. We see it with the leadership. We see it with rates.
Chris, what does that tell you about where we are in the cycle, if it tells you anything at all?
So our kind of view going into 22 was that we're in this awkward or uneloquent transition from something that was early cycle to something more mid, not too different from what we saw in 2011 or 2004 or 84, 85. This is never an easy process going from extraordinarily easy monetary policy to something else. So I think we're in that process. There's always a risk to the base case. The risk to the base case, I think, as we sit here in late January of 22 is staples are outperforming, utilities are outperforming, unemployment claims have started to hook up. Do we need to start thinking about, hey, is there a recession on the other side of this? Is there something weaker economy-wise in back half 22 or 23? We see discretionary underperforming. So I think that's the risk case here. The base case I'm using is we've gone early cycle. We're making that awkward transition to more mid-cycle.
Hey, Chris, good to catch up, buddy. It's good to see you.
Nice
Chris
seeing you.
Ferrone there.
Thank you.
Strategic, a bad company. Steve Englander of Standard Chartered just publishing on the possibility, Tom, of this Federal Reserve calling it quits early on QE and introducing some balance sheet reduction maybe a little bit earlier than expected. He says the following: this could seem hawkish on the announcement, but if Powell says that they hope by going a bit faster on QE, they can go a bit slower on Fed funds, it would become market friendly. Just something to think about, Tom, going into this one later.
I'll show my cards, John. I'm totally with Mr. Englander on this. It's the easiest way out for them because they're crushingly data dependent. And John, I'm going to go to Diane Swankin, what we're going to hear from her this afternoon. It's at the end of the day about economic growth. And if that's the worry, they go the Englander route.
Simple question here, Lisa. Can runoff do the bulk of the lifting for the Fed? That's what Steve Englander is asking this morning.
And some people are saying that they shouldn't even touch the balance sheet. I mean, I think about Bill Dudley, for example, the former New York Fed president, who said that they should hike more aggressively and leave the balance sheet alone. It's not that big of a deal. There are a lot of questions that they can answer. I love what Steve Englander said in his note earlier. If you want constancy, get a dog.
Get a dog.
That was what his reaction was.
I didn't get that deep down in the note.
Yeah, well, that was the analysis. I mean, it really goes to this feeling of a lack of conviction and a lack of certainty with respect to Fed communication, but also the economic data.
TK, any dog-related comments you'd like to make?
No, I think I saw the same comment Lisa saw. Englander, if you want constancy, get a dog. Well, I'm going to send Vet Bill over with kennel fee to give Mr. Englander a course in.
Have you told him how expensive they are?
I know.
Constancy.
Futures up a little more than 2% on the Nasdaq 100. A bounce on the S&P up 1.4%. Yields higher by a single basis point to 178.33. Crude positive 0.6%, $86 and around about 12 cents. A ton to talk about down in Washington. That's coming up shortly from New York City on this Fed decision day. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Policymakers at the Federal Reserve are set to signal plans for their first interest rate increase since 2018. That rate hike isn't expected till March. The Fed's all but certain to hold its benchmark rate near zero for now. Policymakers will also discuss shrinking their balance sheet in the midst of the highest inflation in almost 40 years.
President Biden today meets with auto and tech execs who support passing his Build Back Better plan. One of them is Ford's Jim Farley. He told Bloomberg's Emily Chang the U.S. must speed up the move to electric vehicles.
The country needs to be competitive in all electric. We need to catch up with Europe and China, and to do that we need to help consumers make this transition to electric, and we need consumer incentives that last for some time to help the industry convert over, because we need to build batteries in this country, get raw materials for the batteries in this country. That will all happen as customers go electric.
And you can see the full interview with Jim Farley on Bloomberg Technology today. That's at 5 p.m. New York time. In the UK, Boris Johnson's supporters say Conservative rebels are now holding their fire against the embattled Prime Minister. They say that Johnson's opponents in his own party may delay any effort to oust him until a police investigation into those pandemic parties is complete. Still, that could change with the release of a separate government probe, which could conclude this week. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Risk number one, no zero COVID, and this is specific to China. Why is this the top one in 22?
Despite this massive case explosion with Omicron, the United States, Europe, the developed world is going to feel much more normal, finally, within weeks. But that is really not the case at all in China. They are trying harder and harder to impose strict quarantines, which is going to have big impact on their economy. And it's not going to work well, but Xi Jinping can't back away from it.
How much do you think there is a risk of that being extended globally in terms of supply chain issues and just a slowdown in general?
If they're shutting down cities, and that will include significant amounts of production, that means that we're going to continue to have supply chain challenges across the world in 2022. It also means that inflation has the ability to persist.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Season is coming.
Q4 earnings are going to be awesome.
Bloomberg is fastest with the numbers and analysis.
Amazon crossing the Bloomberg terminal.
Where are investors seeing the weaknesses?
It means profits down the line.
Earnings season on Bloomberg Television and Radio.
We have no intention of putting American forces or NATO forces in Ukraine. But as I said, there are going to be serious economic consequences if he moves.
The President of the United States from New York City with Tom Keene and Lisa Bramett. I'm Jonathan Ferro. Your equity market bouncing back on a session. On the day, the Nasdaq 100 up more than 2%. On the year coming into today, we're down more than 13% year to date. In the bond market, yields are higher by a single basis point to 178.33. Equity futures on the S&P are positive too, up 61. We are higher by 1.41% on the S&P 500. Here's the lead quote, the lead paragraph, Tom, from the team led by Alberto Nardelli on the latest with Germany in these negotiations. Here's the quote. The German government has pushed for an exemption for the energy sector if there is a move to block Russian banks from clearing US dollar transaction. This according to documents seen by Bloomberg. And TK, that's part of the issue for America at the moment. How to get Germany fully on board with some of these big punishing sanctions if they need to be delivered.
I would get back to something, John, you're living, which is the price differential of natural gas in the United States versus Europe. I think a lot of Americans don't understand that. It'd be like having Brent crude right now at $110 a barrel, I'm guessing.
And the dependency, Tom, on Russia,
yeah,
which for the Germans is incredibly high.
Let's talk about that right now and go to Washington. Jack Fitzpatrick joins us with Bloomberg Government. Jack, can we send energy to Europe?
In some forms, yes, but there's a little bit of there's some difficulties, obviously, that are inevitable if there are going to be full sanctions on Russia. I mean, for years, the U.S. has brought up the idea of more energy production, more fracking or something along those lines in Europe. But at this point, just moving things around. You heard President Biden say last week when a lot of us were parsing his comments on a minor incursion that he knows that really following through on sanctions is going to be difficult. It's going to cause a lot of economic harm in Europe, particularly. It can have an impact here. But I think that's sort of the one of the main underlying concerns about when to take action on full sanctions is that it's very politically difficult to get a massive portion of Europe on board.
I mean, Jack, I have the recollection when I could shave twice a week. Now I could shave 3-4 times a week, but literally I could shave twice a week. And LNG was this absolute thought out there. It wasn't even a real thing. And the idea that we would move LNG around based off our political dialogue, does Congress understand the constraint on that right now, that we're actually very limited in what we can do to salvage Germany and salvage France?
I think Congress does understand that. That's why, for one, you heard Senator Mitch McConnell emphasize publicly that he had been pressing the Biden administration to take some sort of action early, despite any qualms that Ukraine may have had with that, because I haven't really heard any indication from either side of the aisle that anybody's under the impression that if you follow through fully on sanctions, or just even that if there's a real flare-up with Russia, that you can move things around to the extent that it takes care of the problem. I don't think anybody's really under any illusions that we can move things around in a way that it wouldn't hurt us and Europe if things really go south with Russia.
Is there the illusion that the U.S. can actually affect gas prices more significantly back at home? And I say this after the U.S. Energy Department came out yesterday talking about the latest release from its strategic reserves and the idea that perhaps they're looking to do more.
There is an understanding, I think, generally in Washington that there are limited options with the Strategic Petroleum Reserve. That's come up as something to use as a response to high gas prices, yes, but I mean, there was a bit of a pushback from Republicans when Biden raised that because it doesn't really solve any underlying issues. So I don't think that's something you can rule out. But you know, talking to lawmakers about sort of what the options are, there is an understanding that that gas prices are an issue, that oil prices are an issue, and that you know, the U.S.'s own Strategic Petroleum Reserve is not some sort of panacea for that. So that's something to look for, but that may be more of a political response than something anyone truly expects to be a very successful Band-Aid.
The political response is really important at a time when President Biden's approval rating just keeps dropping further. How much does this really shape his policy projections, his policy power in Washington, D.C., versus just be something that happens occasionally in the second term of a presidency with a high inflation rate?
Obviously, it's rough for him. If you're trying to determine how it's going to affect sort of the legislative outlook or any other key actions he's going to take, it may be mitigated because, to be honest, at this point, the next big thing that Democrats want to accomplish, which is still the Build Back Better bill, is more or less out of the president's hands, and it's up to if Senators Manchin and Sinema can lay out exactly what they want, and that's good enough for progressives. The time for all the complex negotiations that we saw in the fall and getting into the winter, that really didn't work. So I'm not sure it would make that much of a difference if the president's popularity encouraged Democrats to get together or made them nervous, because really now it's been narrowed down. The legislative outlook for Democrats has been narrowed down so significantly that we're talking about something much smaller. I'm not sure the president's popularity has that much of an effect in the immediate term. It obviously will have a huge effect on the campaign trail in the midterms, though.
Hey, Jack, got to leave it there, buddy. It's got to catch up. Jack Fitzpatrick down in Washington, D.C. That's the domestic story. Just to finish there, Lisa, just on the international front, any president right now of America, any president, any administration would have difficulty uniting Europe on a couple of these issues. China being one, Russia being the other. Did you see the story from Alessandro Speciali on Italian business leaders holding a meeting with the Russian president? I'll read it for you. Italy's government called on a group of top business leaders not to go ahead with a planned meeting with Russian President Vladimir Putin as tensions rise over Ukraine. The event is still expected to go ahead as planned. That's how tough it is right now. Never mind to get European leaders on side, but to get European business on side too.
And it makes sense since they do so much of their business with Russia, with China in particular. And that nexus, I mean, honestly, though, John, don't we see the same thing in the United States with businesses going off and establishing their offices, establishing their businesses in China, even as the administration talks about a more isolationist approach? I mean, it's very similar. It's parallel, at least.
A very similar issue. TK, you want to talk about breakfast?
No, John, just when you and I, you know, we have our leisurely morning in London because we start different there, and you and I get the English at the Wolseley. You know, it's 160 Piccadilly, and it's just it's Barclays' old gorgeous headquarters. John, it's gone. They're in receivership.
Not good. Just over next door to the Ritz, Tom.
Well, you know,
by Green Park. I know it well.
We tell Al from New Jersey we're going to McDonald's at Liverpool. He doesn't know we're having a $7.
I think he figures that out, Tom, when he sees the bill. I think he works that out when he sees the bill.
Just a basic cup of coffee is $8.
It's expensive, TK. Isn't it worth it, though, Tom?
Oh, it's worth it. It's worth it. And the cigar.
would you like to achieve next in Saudi Arabia?
As you know, Barrick is invested in Saudi Arabia already in a partnership with Ma'aden, the state mining company. And we have an investment in the Jabal Sayid copper mine, one of the lowest cost, highest grade mines around, actually. And we have a real commitment to grow our footprint in Saudi Arabia with a particular focus on the Arabian Shield in partnership with Ma'aden. And so after tomorrow, I'm on the way to the mine. So not only how to be at the conference, but more importantly to go and work with our team out at the mine who've really done a great job managing the COVID crisis over the last 2 years.
Crypto, you have a world of young people